All right, it is Tuesday, January 10th, 2023. If you want to get a hold of me, Twitter is at RedBenTrader. You obviously found my YouTube. You can subscribe and get alerts whenever I go live or post any educational videos. As of this point, all my videos are free and they're all cataloged on YouTube. So if you want to see what I was doing last night or last week, it's all there, and you can even watch the live streams in 2x time since I tend to go pretty long. The algo I'm using, like I mentioned, is basically an experimental beta version that's been customized from the skeleton of the trade and perform algo that is built by my coach Simon. I'll show you that too. But if you want to learn more about using the algo to help with trade execution, you can give Simon, my coach, a call or an email. It's trade, the letter N, the word perform, at gmail.com. That's Simon. And you can ask him for a free 5-day pass to the trading room and see how the alpha version of the algo helps us identify trades that have already been confirmed to have very high win rates. So on my chart here, what you're going to see is a lot of extra indicators and colors and signals than you need, a lot more than you would need to normally trade. On Simon's chart, it's much fewer, and in fact, you don't even need all of these. We've got 2 new logos on here that we've added that are they've been confirmed to work, but they've probably got more power than we know. And yet, right now, we're sharing it with the group to try to identify some more patterns. These are the pluses here, and then the big dots here. And you could obviously change how all these look, but I used this for about a year and a half and had a ton of success just doing what I was supposed to be doing. But in the meantime, while learning how to use the algo, I realized that that the power that it has a lot of power to basically do whatever you want. You can customize the system on Sierra Chart to tell you when anything's happening on the profile or on the footprint. And I've been trading for years, so I have quite a few setups that I've already been using, but I was just manually doing it. So for instance, I'll show you what I used to do is, for instance, if I'm looking at a delta footprint, what I might do is identify an area that has a lot of activity, right? A price point that has a lot of interest. So let's say here, right? Like on ES, it'd be like 39.1850 or so. There was obviously a big trader there, right? And then I would look and find where all of the trades that occurred there happened, which was back here. And then rather than getting involved at that point, what I would then do is wait for the market to leave the area and then see if we could get a defense there in the future. So the market would leave the area, and then if they came back into this 39.1850, and we saw a rejection, I would sell it, right? That was my, I would do it manually, just watching the footprint, reading the numbers, looking at, trying to see the patterns. And when I was, a lot of times what would happen is I wouldn't, this one's pretty obvious, right? And so is this one, right? That's actually really pretty. On these expanding negotiation days, you'll get this kind of pattern working a lot, but the challenge is if you're not trading a day like this, or if there's just not a lot of prominent delta points, price points, you may not know whether or not you should trust. So, like for instance, like in here, right? Like which one of these matter? And that's where I would get stuck. Is I would try to overtrade it, and rather than being like literally none of them matter. Like the ones that matter are this, and then if there's like this one probably because it's all by itself, right? It's got to be like prominent on its own. But like here's an example of one where I'd be like, is that good enough, right? Like, do I really want to be a buyer if we return here and bounce? And it was there was a bit of guessing involved, right? So once I was introduced to the algo and learned that you can actually you can tell Sierra chart to you can program it with a spreadsheet to basically tell you when certain conditions happen or not, and it takes a while to learn, but it's doable if you know how to do it and you know how to trade already. If you have some computer programming experience, I don't have a ton, but I had enough like Pine script practice with TradingView to sort of figure it out. It took me a hell of a lot longer than I wanted it to, but so I like for instance, like I said, I started with this, and then I wanted to be able to add ideas like this because I was like, I don't want to have to watch the footprint on another screen. I just want to have the same thing as the trade and perform algo does, where it tells me like with a star that there's an aggressive trader in there, and if that's an area I'm looking to trade, I know that's the location, that's the time to get in is kind of the idea, or one idea that it gives you. So here I was like, well, wouldn't it be nice if I could get alerted when stuff like this happens, so that I know that that's an area that I might want to trade in the future, right? So so I figured out how to program it and added some more signals. So I still have the stars, and I still have the apexes, and I still have the volume shifts. They just look different, right? The colors are different, and the signals are different. So all the things that are here are also here. And then I'm shading these because I have a hard time with the lines like on my chart. I like the shading better. But the other thing I added early on was this yellow line here. It's the most important line on the chart. And what that is, because these are Renko bars, this is a 24 tick NQ Renko chart. So this yellow line, it's where volume is shifting from bar to bar. So wherever that little dash is in the bar, you can see it really easily on this one. So if you look closely, every bar has a little dash. So a little tiny yellow dash. That's the VPOC of the bar, right? So if this was an entire day, the volume point of control would be at this exact price point, right? And that's useful for a lot of trades. But what I found is if I connect those price points with a line, I get a picture of where volume is developing over time, and I can see whether or not this is like, because the Renko can be a little bit deceiving, right? You can have up bars and then down bars, and you don't always, it's not always super clear until the move happens that you are shifting up or down, because you have a lot of these little like wiggles in here. And if you don't have, like here, maybe I can, maybe I'm the only one who gets confused by this, but with Renko, when it starts doing this, right, chop, 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 like, and then like dig and sweep, right? Those kind of moves are really frustrating for a lot of Renko traders, because most Renko traders are looking for things like, I'd have to go back like 3 days because yesterday was doing the same thing, but we're looking for stuff like this, where we have rotations, right, where it goes up and then it comes down and then it goes up and then it comes down. It actually rotates back and forth. It doesn't just chop, chop, chop or go in one direction or the other without any, like this. You can't really trade that with Renko, but you can identify this area and recognize it's bullish, and then look for your signals only to the bull direction once this occurs, right? So it can tell you information, but it might not give you a trade opportunity. But then when it gets choppy, like okay, here's a good example. So see this, chop, 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 chop. If you're really zoomed in and you don't have a sense of what you're doing on the bigger time frame, it's really easy to like to get stopped out. Like you buy this and you're like, okay, I think I've got the low, and then they cut you. Sometimes they'll come down just a little bit further, stop you out, and then run, right? And that happens a lot when it gets like this. And so to help me identify which direction has all the momentum when that happens, let me move this to the end. Because like I said here, if I was zoomed in enough and I'm just looking for my signals, I might not really know who has control here at all. Like it's pretty ambiguous without any additional information, in my opinion. So on my chart, though, if you look at the yellow line where all the volume is, you can it's a lot more clear that volume. Well, to me anyway, it's a lot more clear that volume spent time here, right? See how like volume got chopped, got stuck, right? So what you could do is you could actually mark if you wanted to analyze this, you would mark where volume got stuck, and then if you're here, you would look back and say, okay, price was dropping. Where did volume get stuck? Volume got stuck right here, right? So to be bullish, what needs to happen is we need to get volume above this. We need to develop volume higher than that area, and then it can start to get bullish. And until then, because the direction was down, it's gonna like the table is tilted to the downside, right? When you return to that area, we should expect these same sellers that defended all that volume here to show up again, because it's easy to defend price, but it's hard to defend volume. Just like we saw on the Delta footprint, right? When you have these heavy volume areas and they break out of those areas, when we return to them, it's very normal to get a response because there's a lot of trap traders, right? Volume is just contracts being traded. And so the more contracts traded at like a level or an area, the harder it's going to be, the more energy you're going to need to break through it. And to get energy, you need to trap traders on the other side. Or you need to get some momentum, which is basically the same thing. But you need to have like a trend. But clearly we don't have a trend here, right? And so to be able to break above this, heavy volume price area, we're going to need to trap shorts, and then we're going to need to break through it, which might take more than one try. So we got a few trap shorts down here, and they went for it, right? And so if they break it, and they put volume up here, we then know it's bullish because we've gotten above this. It doesn't mean it's going to immediately going to lift, but it means that we should stop shorting, basically. We should stop selling, because now if we get selling, the furthest it's going to go is the trapped sellers once you've overcome one of these areas. Okay, so a visual, that for me, that was hard to see with all the numbers and stuff. Like, I understood it, but on the footprint, like, I get thrown off, right, when I'm like looking for patterns like that. So I really needed something a little more visual. Whoops, I did the wrong thing. I needed something more visual to identify things like that. And like I said, the first thing I did was I connected these VPOCs in the Renko bars, so I could just draw wherever the volume was getting stuck, right? And so if you wanted, you could also do it here. See all this chop, right? So if we were here, right? And I'm like, wow, this is really choppy. I don't know what to do here. We were going up, and I don't know if this is the top or what, right? I would go back and I'd say, well, where's the lowest place they put in volume? And I'd say it's probably about here, right? That's the lowest place we had a VPOC in this little area. And then I'd say, well, where's the highest place they put volume? Well, it's way up here, right? So all the volume in this move was inside of there, right? So once we see some aggression underneath that, an aggressive attempt like this, and I've got, like I said, from the footprint and the DOM, we've got it signaling aggression and other things. So once I see some aggressive moves, like this is an aggressive sell, the diamond. The stars are aggressive signals too, but the diamonds and stars in general are what you're looking for. That aggressive seller is occurring underneath all this volume. So what is he doing? He's trying to push the market lower, right? If it was bearish, what should happen? You should see a cascade down, and you'd retrace this move, right? If you were in a bearish trend on the higher time frame, and you get another leg down, right? So you could scalp this if you were bearish, or you just watch and see, does he have success or not, right? Well, as you can see, he does not have success. And so where is price probably headed? It's probably going to come back here to this volume, this high volume area, and it's going to test to see if the sellers are still active there or not, because this guy just got trapped on this tiny little time frame. And so we want to, the market naturally wants to stop those traders out. It wants to come up and hit his stop, right? That's just what markets do. It's not manipulation. It drives to liquidity. So if there's liquidity up here, if there's people willing to be buyers up here who sold down here and they don't want to lose any more money because they're off sides, right? They're gonna start buying if price gets up here. So once he gets trapped, the market's gonna try to get up there, but there's all this volume in the way, right? So when we hit this or approach it, if they reject and they can't break through this guy is not going to be trapped for long, right? So if we then get, in other words, an aggressive defense of this area, the bears are still in control, right? So watch what happens. We chunk around down here, right? They're like preparing to try to break through this area. They come up to it and they get an aggressive signal down. The orange is a volume shift, so it means that price went all the way up there, but volume, all the heavy traders were on the down, not on the up, right? It's not divergence, but it's like it requires price to sort of spike. Here, I'll show you what it looks like. This will make more sense here. Look, on the footprint, the NQ footprint's a little more complicated because it's, but if you look, you'll see it. So the arrow, right there. So see how price definitely went higher, right? But what you'll see is there was volume up here, right? And by the time this bar closes, this red one closes, all the heavy volume, rather than being up here, it's actually shifted lower, right? So price went up, and then price reversed, and volume shifted lower, right? We have more volume now, lower than we did at the last up bar. That's what that orange color is saying. Is it saying there could be someone trapped up here, basically, if this is a location that you would expect a trap to happen, like a high volume area, you would expect this to be a trap. And so that went a little further than I wanted to. So once you get that aggressive signal, that's a short, right, out of the area. And then you wouldn't know, if you had no more information, you wouldn't know that it's bullish. You wouldn't want to be bullish until we broke and held over this, right? So when we come back up to it and it does it again, this would typically be a place where you would short, right? And you would keep being bearish until that fails to work, right? So like even here, if this spikes up and then reverses, because remember that volume area is this whole shaded area, right? You don't know if it's going to be at the bottom of it or the top of it, and you don't know how far it's going to go. But the point is that on this time frame, it's not bullish until we trap volume at the lows or we get over this high volume area. I hope that makes sense. It's just a way to think about how price breaks out, basically, especially during days that the trend is not clear. Like the direction is not, it's not unidirectional. You need to identify areas that are like pressure points for the market. And so these should sell off, right? This one did not. See how it tried to go down, but it bounced off this? Why did it do that? Probably because we had volume developed here. If I mark this again, where all the volume was here, right there, right? Where does price come back to? It goes right into that zone. It finds a buyer, and that blue dot means there's divergence, right? So there's more sellers than buyers in that bar, yet it closed bullish. The arrow is a momentum shift, and we're off, right? So you would be aware of the location if you drew the lines, and then you'd see the short set up, and you might even take it as a scalp. But when they can't break down, it should do another leg like this. It should be higher high, lower low if it's bearish, right? And instead you see this, you gotta either reverse or at least get out of the short. It didn't set up long like I wanted it to. I would have wanted a star on this bar. A dot and a star on that bar would be perfect. It needs to be both though for me to get in, just because I want the higher win rate. But the location is right. It just didn't trigger. It might have triggered on the other time frame. Let me check. Did I get a star here? I did. So I got the star here. See the star with the dot? That's your entry. This is a smaller time frame, so you get more signals, but it's the same exact pattern. See that? So I don't have the drawings on here. So this is the same zones, right? We got over it. We got the volume shift down. That's the same. They tried to break down. They got into this lower volume area, or the high volume area below the other one, right? That little chop zone. They got into it. They only were able to put purple bars in it, which basically means buyers were pulling their orders, but there's no aggression to the downside. And so buyers responded with a divergent bar and aggression, followed by a momentum shift. That's bullish, right? So if I was watching this and I was aware of this location, you'd buy there, right? If I was trading that time frame. I don't usually trade that time frame, but if you wanted to, it works. Just not as often as the bigger time frame, but your stops are smaller. So that would be an example of a pattern that you might use. Now, here's the thing. I'm fine drawing the lines, right? It just takes a while having to like identify where the volume areas are and drawing all the lines. That's it. It's a little cumbersome, right? You can do it, but it takes a little while. So what I wanted to do is I wanted to figure out how to get these levels or these zones without having to draw these shaded areas. So here is what I've got so far, right? When you get, you have to have a way to identify where volume is getting, like it's basically, it's going to look like overbought, oversold on this oscillator, but I don't want you to think about it that way. What I want you to think about it like is that you've got a lot of continuation without any rest, right? So it is overbought, but it's not price, it's volume. So in other words, all the aggression is going to the upside, and then there's just very little, the sellers aren't getting anywhere on price, but they're also not putting any energy into fighting back, is what this means when it just goes straight up like this and then it tries to break back in and it goes on the volume zone oscillator. So you need to be able to build a signal or some kind of trading plan. You need objective measures, right? So you need to pick a level that you decide is like the line in the sand. And what that level is up to you. I use some math to sort of figure out like what it usually does, and then tried to get like a standard deviation beyond that. But I don't think the exact number really matters as much. The concept matters more than anything. So the idea is this red level is and then there's a red level down here too. They are at location. They're far enough away from the midpoint that they don't get touched very often. Right? You need an unusually strong move to the upside with very little volume to the downside to be able to even touch that red line. Okay? So getting to the red line is not bearish. I want to make that very clear. Not bearish to get to the red line. What is bearish, what I'm finding is bearish, is if you break over the red line or touch it and reverse, and then rather than just going down into the green area and rejecting back up into the black area and just continuing the bullish trend, instead, volume is going to give you the hint long before price does what you need it to do to get you paid, right? So volume
you get an aggressive seller, is what it basically is. You get, well, it's not an aggressive seller. It's sellers piling on and following each other, right? It's usually not just one aggressive seller like the stars. It's like someone sold and then someone followed him in, right? So you have like a wave of selling, you could say, with relatively high volume is how you get these breaks down to the midpoint. So it goes from the red line, it comes all the way back to midpoint. Once you've gotten that move, another retracement back up here is usually going to be sold because these guys, remember, were not very committed. They didn't have to fight very hard to push the market for this last little wave. And so if these sellers are committed, and it looks like they are because they're following people in, right? Then pullbacks should be sold. The hard part is you can't just sell the first up wave or the first up bar because the market isn't that simple, right? It's gonna try to wiggle everybody out and then flush. So the hard part is the easy thing is when you see this pattern on the volume zone oscillator where it goes to an extreme level and it comes back to the zero line, that you may want to start looking for a short setup. It's not a bearish, it's not immediately a short, but it's start being on the lookout for a reversal. So then what you have to decide is, well, what do I need to see for a reversal, right? So what I would suggest is you figure out that by looking at what happens. I don't think I can do more than one. So I want to look at what happens after this midpoint touch, right? So from here, if I'm studying this and I'm like, what is the signal that really, what's the condition that really sent things going lower? Like when did that happen, right? Well, it certainly happened somewhere in here, right? We might not know exactly what point was the tipping point, but somewhere in there was a, they might do it right here actually. There was something going on here that they turned on the sell program, right? Because remember, with the volume zone oscillator, if you are up into this black area here, the sell programs are basically off, right? And then to see the sell program, what you're usually going to see when it turns on is going back into the neutral area and being unable to get back to the black. So this is still no sell program. This is just some poor, an unfortunate seller who tried to fight the trend. And so the sell program usually comes on after getting an extreme reading and then a reverse back into the neutral, right? Once you've seen that, okay, sell program may be on, but we need a trigger. We can't just sell that, right? We can't just sell this. So I've got the marker. If you look, there's a little red X there, and it's telling me, hey, there might be a sell program running, right? But I don't necessarily want to sell with it because I've got a much different time frame and a much different risk tolerance than like algos that are just kind of like deciding where the market's going to go, basically. So, but at this point, I'm thinking, okay, before this, I really didn't even want to think about being a seller. But now that there's potentially a sell program going, I can now start looking for certain conditions to sell the market, whereas before I wouldn't have, right? In here, if I saw the conditions or I got the signal that said sell, I wouldn't do anything about it, right? But once I've seen this, now the conditions are better for sellers. And like I said, you can see that on the volume zone oscillator without the algo like that, right? So now we have to ask ourselves, okay, so what was the condition, right? Like I've got plenty of signals on here telling me all sorts of things. So in this specific scenario, what was the condition that triggered that sell program to actually cause some selling, not just hold back the market, right? Because it's one thing to have a seller in the market. It's a whole other thing to actually break down price. Because as long as this buyer continues to participate and defend, it doesn't have to go anywhere, right? So what happened in here that changed things? So what I would suggest, what I see anyway, is I see the X first of all with where it turned on, right, where the volume zone oscillator got basically overbought and then rejected into the zero line. And then above that, we got a momentum shift. These yellow arrows. See these yellow arrows here? I don't know if that one's on top of another yellow one, but there's a yellow arrow right there, right? So those yellow arrows are momentum shifts. They're based on like a very low lag momentum concept. It's kind of similar to RSI or stochastics and things like that, but you could probably use those. You'd have some lag. But this one is kind of what we call like lagless, right? And because it's tweaked for Renko and stuff like that, it's just kind of got some cool properties. But the challenge is that condition is only a sell after this sell program, after this condition occurred, right? You actually have to have sellers in the market to even care about a momentum shift on one of those indicators. Because if you look back here, this was the exact same condition on the momentum indicator, and it definitely didn't sell. Why not? Because there was no sellers in the market. The momentum indicator just got a little bit overbought and needed to rest, right? And so I'll still get the signal on the algo, but I know not to do it because I haven't gotten it's not bearish, right? And so once this occurs, now it could be bearish. Now this one also got a momentum indicator, the little arrow, right? And so you could technically sell this one if you wanted to, but they like to come back and sweep them out. See that? So the best trade I have for this so far, here, let me just do this. The best trade I have for this so far, I'm going to show you where this works and where it doesn't, is when you get the X, just to simplify it, if you get an X, and then that X has an arrow, if you then trade behind it, and you come back with another arrow, you're usually safe to sell. And you should stop buying dips until the condition changes, right? Now, the other way you could do this, if this one doesn't get an arrow, if the X doesn't get an arrow, you can wait for the first yellow arrow, and then if you get a yellow arrow on a lower high like this, you can sell that one. And the reason is because you've got confirmation with the lower high usually that this momentum shift is actually taking, right? They're respecting the momentum shift. If this one does not have a yellow arrow and you sell the first arrow, sometimes you're going to get stopped. I mean, you're going to get stopped sometimes anyway, but more often you're going to get stopped and then it's going to go, right? It's going to do this. It's going to do this. And then come back with another arrow, and that's where you're supposed to sell. So if you want to be more conservative, basically wait for the second arrow, right? But you really need it to be located in the right place. And you need to wait for this condition to occur. So, okay, so let me show you some other spots where that works. And it also works in the other direction, which is cool. So let's take a look in the other direction. Now, sometimes you're going to miss the move, right? Sometimes you're going to miss it. So here, we got all the way, volume zone oscillator got all the way oversold here, right? And we got the indicator early that the buy program may be on, okay? It's not exactly that, but that's, if you wait for this, actually it's touch this, break back to zero. If you wait for that, you can pretty much be confident that the buy program is turned on. I've got it alerting me a little bit earlier with another technique, right? But you can see it on the volume zone oscillator. So I think that's if you don't have the algo, that's a good way to sort of like cheat a little bit. You're just going to be a little late, right? You won't know about it technically until it comes back to the zero line and then breaks through it. So you wouldn't know about it till like here. Then you'd know the buy program's on. But remember, you don't buy that, right? You need to look for the blue arrows. Now here, the first blue arrow didn't align perfectly with the X, but that's okay. It's close enough. We got the buy program and we got the momentum shift, right? So we see that, and then this arrow is not located in the right spot, right? We want it to be at support. We don't want it to be on the breakout. We're not buying a breakout in this scenario, right? We want it to go, if you're looking for the one on the X, if the arrow is on the X, we want it to go behind it and then come back in with another arrow. That's ideal, right? So if there's no arrow here, you can wait for the first one, and then you can either take the one behind it or take the lower high, right? So here, if there wasn't an arrow here, if this arrow did not print, right, then I would wait for this one, and I'd say, okay, I just need a higher low with an arrow, and I can get long. And so I would miss this one, right? And that's okay. That's fine. That happens. But thankfully, this one, you got an arrow here, right, after the buy program was on. And so you know that, like, if they sweep this low, it's probably going to get bought. So I could have definitely made the mistake of buying this. There were two or three signs of aggression on this bar, and it did sweep behind, right? If it would have had an arrow, I probably would have bought it. And it would have done fine. It would have gotten 10 points at least, right? Because my stop would go down here underneath, right? So there's nothing wrong with buying this one, the trap of that blue arrow, once you've gotten the blue X, the buy program's on, right? But if you didn't have the algo, you wouldn't have known that the buy program's on until 10:54, like here. And so you missed that trade, that scalp, which is okay, right? Then you got behind it and you got a new blue arrow, and so you might skip that one too, unless you identified that this was an area that you might want to be trading. But the good news is now you know that it's bullish, and so if you got another arrow on a higher low like this, you could buy that one, and then you'd get a lift, right? And you would also know whether or not you care about this yellow arrow, right? Because you know with this system whether or not you have the sell program running, or whether or not they have the sell program running or not. So in my case, I need a red X to know that the sell program's coming, which I do not see here. So I would typically not short this under any conditions, right? Now, if you look at the volume zone oscillator, we did break above the red, right, and then broke down to the zero line. So that is an indication that the sell program may be on, right? And I just haven't gotten the X on this time frame. So if you were using this method, you would say it looks to me like the sell program is on, and that's fine. But then once it came back up into the black, you'd kind of, something's not quite right? That's not usually how this works. Usually, when you're ready to sell, you're getting a failure. The bulls are unable to return this volume zone oscillator up above the neutral zone. They fail to do it, and then they roll over. That's usually what happens because sellers are dominating, right? You shouldn't really get a breakdown and then another lift if the momentum is to the sell side. So that would be a warning here of like, whoa, maybe I'm premature, right? Because even though I got the crude signal, right, it's not perfect, but it's something, right, where you got this basically overbought, and then it came all the way back to the zero line, which doesn't happen very often when it's bullish, and it's usually a sign that there's a sell program running. It's obviously not 100%, right? It's a very crude idea. So when it comes back up to overbought again, that's actually not bearish. That's not bearish, right? And that's why the idea of overbought and oversold are so misunderstood. Is they only matter under certain conditions, right? If you're bouncing off the zero line and you come right back to it, that's just a trend. So you'd have to now wait for it to break down again before you think about taking momentum trades with the arrows. So I would not be a seller here because the arrow showed up after breaking back above into this black area. It doesn't mean it can't break down, right? I'm not saying that you have to be buying everything. I'm just saying if you're looking for the higher odds way to make decisions and you don't have the algo, that would be a relatively easy way to decide whether or not you want to be a buyer or a seller. And if you don't have the arrows, they're my own signal, and I'm telling you, you can use whatever momentum indicator you like to show you, and then just watch for a shift. So even like MACD is going to be a little too slow, but something like stochastics, right? If you've got like a little divergence in the stochastics and then it rolls over, perhaps that might be a good place to look. If you have a moving average that's relatively fast and it's breaking under a moving average that's a little longer, that might work, right? I'm not saying that's gonna be perfect, but whatever you know already as a sign that gets momentum traders into trades. That's what you'd be looking for. But what's funny about it is that you'd think that momentum indicators would work best if the trend is already in place, and it does, right? They will work best when the trend is already in place. For instance, if I go back to an area that's clearly bullish, the blue arrows are going to work better than the yellow arrows. So let's say this. So you wouldn't know that it's bullish here, right? So if all you were doing is just waiting for a trend to develop and then buying blue arrows because you're a momentum trader, you might not know here. You might not even know that it's ready here, right? But by the time you break through here, you probably would think, okay, it's bullish, so I can likely buy blue arrows. Should I sell yellow arrows? Probably not, right? But blue arrows are generally going to be more safe places to buy. Now this one got stopped out. If you put your stop right there, if you're trading futures with it, right? That one got stopped out, and you'd have to take the trap back in. So they're not 100. You're not always. It's what I'm trying to show here is that they're not a very sophisticated way to trade without additional information, right? Even though you think it's bullish, and yes, this worked better than this, right? All of a sudden, the yellow one works, and then you just don't get any, all the way up. No more arrows, right? So and then by the time you do get another arrow, it's no longer bullish, right? And so if you're using just your momentum indicator to trade, you're gonna struggle during days like this. It's gonna work okay when the trend is really clear and you've got room to the direction, like if the chart, if you're not trading into resistance or into support, right, and you're trying to go that direction, that'll work even on futures. But when you're not doing that, you need more. You need more conditions. You can't just buy dips and sell rips when it's not trending, right? That's I don't even know what to call it. Like, without being like sounding patronizing, it's just the way that the market works. So, while I have the arrows, you'll see that they are not included in the algo that Simon uses and shares with the room. And the reason is because you can mess up really bad trading them as signals if you don't have the rest of the equation. It's gonna cause problems, right? You need to trade with the direction, and you need to make sure that that the traders in that direction are still participating. You don't want to buy when the buy program is off and the sell program is on, right? So, but see how, okay, so just to use a real example right now. So see how we got to the zero line, we got back to the black. They gave us a yellow arrow. Should we expect that to work? Not way up here, right? It pulls back. They find buyers immediately, and buyers support it. And so this one has a blue dot and a star. It's really, really, it's very aggressive, you could say, to buy it, but it's technically a buy signal. The reason it's aggressive is because of where it is location-wise compared to the price action, right? What you're basically saying is that old high volume area we talked about, we traded over it, and you're saying that this is new support. And if that's the way you see it, that's fine. But when I look at the big picture, I don't don't necessarily see a huge bullish move coming. I see we're stuck inside of this like chop range. These little pink and purple areas are causing us to get chopped up. And we're going to need to leave the area, and we're going to need to trap somebody and then leave the area for a real this was probably the last up move because this move was so severe. So it's very, I'm not saying it's bearish for sure, but that whatever happened here, this little lift, it appears that at least for the time being, this is the end of that, right? So the high up here is not going to be easy to take. I'm not saying it's not going to break. It's just not going to break like this. Let me find another one on the other side. Or in the past, I'll show you what I mean. Okay, so healthy breakout, right? Healthy retracement. This breakout got a healthy retracement, but then this breakout, well, that got a healthy retracement too. This breakout did not. See how this is like a weak breakout? And that retracement was pretty severe, right? Once you see that, you know whatever was going on here, whatever buy program was running here, it's done for the time being, or at least it's being countered by a sell program on this bigger time frame. It doesn't mean we can't return up here. It's not just immediately going to, it doesn't mean they're going to pull the rug, but it means whatever was working, like buying dips, for instance, like blindly, whenever your momentum indicator turned up, it's not going to work in here, right? And so what you end up getting is an attempt and then all sorts of expanding negotiation from one level to the next, right? So a lot of people, oh shit, went to the wrong one. A lot of people are gonna buy this breakout and get wrecked, right? It's really common. It's like, look how bullish it is. It's making higher highs and higher lows, and now we get another higher low, and it's gonna rocket. Well, it could, but not until they trap somebody. So they trap buyers, they trap sellers, they trap sellers again, and now they can break it, right? But now we've had that same sort of big move up, big pullback, and then we've had an attempt at another impulse move. Now, this impulse move did have a decent amount of volume, right? So we may come back up here, and so maybe it's good enough to buy that as a momentum move. I wasn't confident to do it, but maybe we do come back into here. I don't think we come back up to here without another trap. Oh, I guess unless you could say this is a trap, I suppose, that this trapped them. But I kind of mean like after this move, I feel like we need a lower low if we're going to get higher. If we do go up here, I'd actually be looking for shorts, to be honest. If we rip here, I would be not immediately, but I'd be watching for an opportunity to sell rather than be a buyer. I would prefer to see them reverse it here than just rip 50 points. So I'm not going to be aggressive, and I'm certainly not going to put my stop down here or down here and buy up here with futures. But normally this combination of bullish on the volume zone oscillator, but a bearish momentum signal followed by an aggressive buyer underneath is usually a really, really good buy. But it needs to be at support. I can go find one. Here, I'll find one at support. It's easy to find them in retrospect. So we're looking at a yellow. Well, first of all, we need volume zone oscillator to be bullish, but we have a yellow arrow, right? So here, let's see if we got one here. So volume zone oscillator got bullish here. Did we get a yellow arrow? Not while it was bullish. Not while it was bullish. Okay, right? There's no volume. There's a yellow arrow here, right? After now this one went all the way to the yellow, so this was extremely overbought, and then they dipped back. So you might not notice how that one, right there, sell program's on, right? So now you're done buying, but that's not what I wanted to show you. I wanted to show you one where it's still bullish. Here. Okay, So see how we have not gotten the sell program, right? There's no red X's, and we've not broken above this red line and came all the way back underneath the yellow. It's just building higher highs and higher lows, right? It's bullish trend. We get a yellow arrow, which it says that the momentum indicator is trying to turn to the downside, okay? But it's not bearish. So what should we do? We should watch for an aggressive buyer to defend support. It might be this support, it might be old resistance, new support. It would be great if we got a purple bar first, followed by a star, or a purple bar, followed by a green bar, or a purple bar, followed by a diamond. Something like that would be great, right? So we have to, okay, we get another one. Is it bearish yet? Not yet. We did get overbought and we broke down underneath the red, but we have not gotten to the zero line. So we're still expecting buyers to show up here, and there's no red X's. So no reason to think that it's bullish. Now this one would be very aggressive, right? It is an aggressive buyer, but buying this would be pretty aggressive because we're nowhere near a support. And so you're saying this old resistance here is going to immediately be support, and you better hope that that trend is really strong, right? So technically you could buy it, but usually not a good idea. Usually better to wait for the purple bar followed by the star. There, purple bar. Ooh, it didn't give us it didn't give us it there. So let's see if we get it here. Purple bar, star with the blue dot. This is perfect. That I would buy. I don't know if it works, but that I would buy. Oh, it does not work. One more time. Now they get the diamond, purple bar, black dot, diamond, and a blue. That's probably going to work. And then there's the buy program confirmation, a little bit late. But once you see this, now yellow arrow, purple, green, go. Right? It says buy program's confirmed on. It was a little bit late, but and I guess that would have helped. I probably would have bought this still. I probably get stopped, and then when they trap back into it, I might buy this one with the arrow. As long as wait, hold on. So we got overbought. We broke below zero. I could be wrong about this. Did we get a yellow arrow? We did not. Right? No yellow arrows. Right there. Yellow arrow. Okay. So I guess, so this is one of those situations where if you read this differently, and rather than, see, I've got the advantage of having more than just the crude signal down here, right? I've got the algos, the X algos that give me a much more sophisticated way to know whether or not buying is happening or not, whether or not they're participating, and there's no red one. So from my perspective, using this system, I know it's bullish. It's just a matter of finding an entry. If you use this system alone, you might not have identified it, but I would see it more as scalp, as a scalp zone, because after visiting way up here, we did break down below, right? But then we also tried to get bearish, and now they've breaking back up above. So it just looks like balance here, and so maybe I wouldn't be super bullish without this indicator. But then you can see they start to make higher highs and higher lows, right? And it does get trendy again. So if you are only using the volume zone oscillator, you're going to miss some trades, is what I'm trying to say, right? You're going to miss some trades, and you might even get bearish here on by mistake. And that I don't have a great way to fix that. It's just the result of trading with a more crude indicator without more conditions. But with the X's, once I get a blue X, if there's no red X around here, I'm going to assume that it's bullish. And so these are not sell points, and in fact, they might be trap opportunities. You can see this blue arrow was early. Well, really, the X was late. And so, but we've had the blue arrow. So the other way I could do it is stopping this out and then coming back with another blue arrow, or a higher low with a blue arrow. And so here there's no blue arrow, but if I get one in a higher low and a pullback, it would still be a buy as long as I haven't had a red X yet. So no red X, no red X. Okay, we get way overbought, right? We get a yellow arrow. That's a little dangerous. You have to be watching for that. And then we've broken back below the zero line. That suggests from this crude way of doing it with volume zone oscillator, it might the sell program may be on. Do we get the red X? Okay, sell program, yeah, activates. They get underneath the volume zone oscillator, right? And everything resets. So I didn't get a red X that time. But you see how it works? It gets down below, comes back, rejects. It can't get up to the black, and it rejects. So if you have yellow arrows in here, you could take them. That setup just didn't fire. But this one is not one I would buy just based on the blue arrow. Why? Because we aren't bullish. We didn't get volume up here. I didn't get any blue X's, right? And we've actually visited the lower end more recently. So I'm not bullish yet, right? If I can get a bullish trend to develop, then the next blue arrow might be good, right? So there, bullish trend, higher low on price, blue arrow. That one's safer, if you will. Well, not that time. They're not always going to work. Well, we didn't get a blue X, did we? So I might not have taken it, but it did. This indicator did look like it was going higher. It did not break the red, so I wouldn't really call this a sell off. You know, this is just a higher low. It just fired a little early. It's too bad that it didn't come back here. Okay, we get to the overbought. We come all the way back to zero. We're probably going to get a red X. There's your first arrow if you want to be really aggressive with it, right? That one, not surprisingly, gets stopped out. We get a sign of aggression telling us to go short, but there's no arrow on it. So it's not quite as, I wouldn't be confident, and we haven't had a red X. So it does give you a scalp. Now it looks a little bit choppy. So both of the arrows might start working or near them. Okay, there's our red X. Sell program clearly on, right? So we're gonna need a blue X before we start thinking about buying. And yellow arrows, especially the second one, is gonna be good. So let's see. No arrow. There we go. Yellow arrows. We got behind the X and they came back with an arrow. That's probably good to sell. This, and it's on a sign of aggression, right? So without knowing anything about location, without drawing any lines, I could have I could have nothing else other than the X's and the arrows, and I know already here that it's probably bearish to neutral. It's not bullish. And if you look at the volume zone oscillator, what happened? We broke into the overbought. We came all the way back to the zero line. The buyers could still be here, but the sellers are definitely present, right? This is actually very dangerous because they haven't exhausted down here yet, and they're chugging along down here. So there's plenty of sellers in the market. Then we get a momentum shift and a volume shift and an aggressive seller. I'd assume that goes down, yeah. And if I got another one here, if I took profits here and I got another yellow arrow, either here or here, I'd probably sell it again. Like right, if that was a yellow arrow, I'd probably take it. Or this one, I'd probably take it. Thankfully, oh, we got an X. X. So we have to start over. That X got beat. So don't sell. I don't think. Unless you could try, I guess, to get a what's it called? Where they like save the level. But this is pretty severe. And look how this is not overbought. So I wouldn't mess with it. Look how, like, this is a big move in price, but the volume zone oscillator did not reach the yellow line. So it's not worth fighting, right? So that X just didn't produce any trades. There was no yellow arrows, no momentum shifts. They just all bought it, right? Eventually it'll obviously retrace. This had divergence and a sign of aggression. You can trade that if you want. That's a different setup, but does work for potential exhaustion, right? It works better. It didn't quite touch the line, so the crude way of doing it, you wouldn't have known to look for it. I wonder if once I get the X to the downside, if it makes divergence more accurate. That's possible. But anyway, you get the sell off. I just want to see if I get another one. So here's this blue arrow all by itself during the sell. Do not buy that, right? And I wouldn't buy this either. Why? Because even though we got oversold, right? But we have not gotten back to the zero line and held. See that? We got back to the zero line here. So when we got this blue arrow, We did not get back to the zero line on that volume zone oscillator, and I haven't seen a blue X on my screen, so I know not to take it even without the volume zone oscillator. But now that we've gotten this move from oversold to the zero line, what we want to see is price hold above this black area, and that would suggest that a buyer might be in the market. So you might not want to buy this. I mean, it might work, but it's pretty aggressive. It does work. And now we've clearly rejected, so the yellow arrows are not going to work as well. Right? So hopefully that kind of makes sense. See how now we're bullish? Here we get exhausted, right? But do we get back to the neutral? Oh, there's the X right on target. It's got an arrow, right? Do we get back to the zero line? Yes. So now arrows that either come here or like behind this one, or a yellow arrow on a lower high is a good sell. There it is. Sell. And sell. Oh, that's where we were earlier. And then blue arrow, blue X, right? So now we'd have to wait with the selling. This one's got an arrow. Wait for underneath. Oh, that one not quite right. I mean, I don't know. It's a bar late. It should have been on here, and it wasn't. So I'll just skip that one. There. Yeah, that should be okay. Yeah, it's a little scary because it's not a perfect. See, as long we really want it to come back in to this bar's range with the X, and it does. Close back into that bar's range. So I believe this works pretty well. Is it 100% no? And then look, higher low, buy. Right? Okay, we got, so the crude way, we got above zero, but we haven't gotten, or got above, overbought, but we have not gotten to the zero line. So these yellow arrows should not be sold as far as I'm concerned. Right? This was an aggressive buy, very aggressive buy for like a scalp that I wouldn't do. But to be bearish, we need volume zone oscillator to break underneath the zero line, and then preferably not break and hold up above into the black. That's what we would need to see before we got bearish. Until we see that, it's just buy dips. Like I might actually buy this. This is a better buy if it closes here than this one was. Like this one is probably okay, to be honest. If it closes bullish. Let me just make sure we have some aggression. Oh, we don't. Oh, the bears have all the aggression. It might not be a good idea. The bears have all the aggression. It's probably not a good idea. I don't have a buy signal, but even if I do at this point, the bears have shifted this enough on the smaller time frame. See all this aggressive selling off the high? You don't know. It might not be smart to fight that. It's a little bit dangerous. So I'm going to wait. I don't like seeing all that aggression on the smaller time frame. There's a lot of selling here. There's more selling there than there was buying into the high. See that? And so when you see that, it usually means that this high is going to be hard to break. You can also do it if you don't have this. You can measure where the volume is on the way up and see how we got volume below that on the way down. So when you see that, if you get a sell signal up here, it can roll over. And here, I'll show you it on the footprint. Because I know this is confusing for people who aren't used to the algo. So, oops, I got to mark it so it's obvious. So this is the point where volume got under, right? And you're looking for a sell in the purple. So there, oops, make it bigger so you can actually see what I'm talking about. Oops, not that. Okay, so where the arrow is, right here, is where volume got under, where all the volume was on the way up. So see how there's an extended line here. So on the way up, most of the volume was here, right? They have potentially trapped traders up here, or vulnerable traders that could get trapped, and they get trapped when they put enough volume in down here, right? So we got a lot of volume down here underneath this one. So now on the way back up, if they reject one of these, like this, right, or this, where all the volume is, if they come up there and they reject it, it's probably a short. So rather than buy this, it makes more sense to sell, to me, it makes more sense to sell out of here. Now, I preferably want a algo signal, so something like a star or a orange bar is best, but a diamond works as well. Not sometimes the diamond doesn't work, but the diamond will work. Sometimes. But I got to keep an eye on the volume zone oscillator because really what we want is for it to break down below the zero line, and that has not happened. So, in other words, the sell program, and there's no red X, right? So there may be no sell program on, and there's just no participation from the sellers. It's not what I would expect, but you got to trade the market you got, not the market you want. So if there's no sellers, then I can't sell it. Because with my 3 NQ contracts, I'm not going to move the market. That's not the way it works. So we'll see. Let's see if we get it. Star up would be interesting. They're saying F you shorts. We're pushing. I mean, and they might, right? They might. I don't know. It can happen. Wouldn't be the first time. But in my opinion, the better setup up here is a short. You just need that. You don't want to be the first one in. I want to see someone else have some success first. And right now, no one's even trying. They're just, those pink bars are just like, sellers are just giving up. They're like, you can have it. They're folding, which is not what I would expect, but it's what you get. So let's see. But see how they can't get it below the zero line? That's a problem for bears. There's no participation to the sell side. As soon as they start to sell, buyers just show right back up again. But the interesting thing is they've gotten nowhere since that started, right? Like, since they've gotten up here, which was here, buyers have gotten nothing. And look at all the energy they've had to use, you know? They're staying up there. So I based on just the indicators, I think that any attempt here probably fails. But to get a sell signal that I'm actually going to take, I need to follow an aggressive trader in. Like, I know I'd like them to sell this, but if they don't, then I don't. But if they put a star down here or an orange bar here, I'll take it for a sell. I'll try it. Like I said, it's a little aggressive because we have not gotten this breakdown yet of that zero line, but the indicators on their own are not the be all end all of trading, unfortunately. I wish they were, right? I wish it was as simple as just saying, well, just wait for it to break down under zero line and then you'll have a 80% win rate. Like, no. It's not. I wish. But, you know, at least 50% of the time, you're going to see that work out that way. So the better way to think about it is like probabilistically, right? It's like, I really want this to be a sell, but I know that probabilistically my chances of it actually working are going to improve if I can get volume zone oscillator underneath the zero line. Does that mean that every time that it goes overbought and breaks under the zero line and you get an aggressive seller that you're going to get a sell-off? No, right? It just doesn't work that way. But if you're looking for a place to sell and you have other information like location or order flow or whatever, you're watching the DOM and you see an aggressive seller, and then you look here and you're like, oh wow, we were overbought on volume. They pushed really hard. They got nowhere, and now the sellers are participating because we're getting under the zero line. Now it becomes supporting evidence of your thesis, right? But it's imagine being like a crime scene, like what are they called? Like the detectives, right? You're not going to go into like if you've got all sorts of evidence that there's been some kind of like a murder, like gunshots everywhere or whatever, and then you go over and you see in the kitchen that there's a knife with some and a bloody fingerprint near the knife. You're not going to be like, oh, this was the murder weapon, right? Because all the evidence says that there were gunshots, like people have freaking gun, like they got bullet holes in their bodies, right? But there was a bloody handprint next to a knife. You might like it to be that simple, but it doesn't mean the knife was the murder weapon, right? I mean, honestly, even if there was a gun there, you'd have to check it, right? There's a chance that there was just a second gun. It might not be the murder weapon, even if it looked just like it. But what this is basically saying is, what I'm talking about is the situation where it's like everything says be bullish, but you have this one little piece of information that says, actually, this could be bearish. That's not a great time to be aggressive to the bear side, right? That might be a time to be a little bit cautious to the upside, but it's usually not enough evidence all by itself that whatever is happening is going to change. So I don't know. I don't know if that's a good analogy or not, but it it's very similar in the same way. We have to think about things in the same way. It's not just when X happens, I do Y. It has to be and expect Z, right? It has to be when ABC happens, I do X, and 60% of the time I'm gonna get Y, right? And 30% of the time I'm gonna get Z. You can't just expect I get A, B will happen. I wish it was like that, but it's not. All right, so on the tiny, tiny, tiny little time frame, we did get sell program on. See that? It's a very small time frame. There's lots of noise on this, right? But it's an early warning. Considering that I also have this other information on the higher time frame, it's an early warning that momentum sell signals might start working, even if it's behind that level. So, like, if we get a star with a black dot up here, especially since we've got some volume up to the downside on that first move. If we get a star to the downside, or we get a black dot with a star, or we get a yellow box, or any a diamond, orange bar now, right, an arrow to the downside, a yellow one, all of those might produce at least an 8-point drop, because this is a tiny little time frame, so you can't really expect any more than 8 to 10 points based on the signal just on here, right? Especially when it doesn't jive with the higher time frame. But the possibility of a short trade is potentially coming. The tricky part with these signals is that you can get the sell signal, and then as you're waiting, or you can get the bearish signal, like as you're waiting for the trigger to get in, you could then get the bullish signal. And when that happens, it's usually a sign that one side is either in total control and the other side is getting like dominated, or it's so choppy that it's probably not worth trading anyway. So basically, once I see red X, blue X, red X, blue X, I'm backing off and I'm saying, okay, this area is obviously very important. They're fighting over it, but this is probably not the time to participate in it unless it's very clear who's going to win. I can show you some examples of that, but it's going to happen on the small time frame more often than the high time frame. Again, like, you can see how slow things are, and that's kind of another indication that, like, it's slow, yet it's not grinding higher, right? Like, the slow movement is this, right? We're not getting slow grind higher is like these bars take forever, and then these bars are fast, and then these bars take forever, and then these bars are fast. It's kind of hard to explain, but like price action, what is it called? Like aspect. No, that's not the right word. Like can't think of a good word for it. Characteristics of like good price action. That, well, when I say good, I mean like a price action that fits your strategy. You get pretty good at recognizing it very quickly, and it's just a matter of clarifying like what it is that you're seeing to know what quote unquote good price action is. And it's sometimes easier to define bad price action, like price action that doesn't work very well with your strategy. And for me, an example of very poor price action would be in both directions. We're moving very slowly, and either we're not going anywhere or we're only going in one direction. And I mean, obviously you can just join that direction, but it's very hard to do that confidently when they don't have any like speed, when nobody tries to sell it really, and it just kind of like drips, and then when it finally stops, no one even tries to buy it. It just like moves its way back up very slowly. Like it gives it suggests that there's no one interested in this level, and that would be a very aggressive buy to buy it here, right? You'd have to be very confident that there's a good chance that you're going to get some kind of big extension. Well, usually when you get a big extension like that off of some sort of move like this, and you get a big extension, usually it's because traders are trapped. And when traders are trapped, they trade with urgency. I see zero urgency here. You can see it on the DOM too. If you watch the DOM, like you can learn to see what urgency looks like on the DOM. And again, it doesn't make it a short. It just makes me not want to be aggressive. It makes me want to wait for the better trade. But remember, this one was technically valid, right? We got the dot with the star, they traded underneath it, and we got the buy signal. I didn't want to be aggressive here with this price action. I thought the short was a better opportunity if it set up, but it has not yet. We need a bear bar with an aggressive signal in this purple zone here. But I was not confident enough to buy this dip here, even though we did have an aggressive buyer get defended. Okay, pink bar. Let's see if we get a sell here. I will go ahead and take it if we get it. I don't know if it's going to work, obviously. But you can see that we're getting the arrow there, potential. That's early warning. It's not a signal until the bar closes. So I needed to close bearish and have the arrow on it. I would have preferred that this bar went just a little bit higher than this bar. That would be way better. Way better. So I'd like them to go up just a little bit. Sorry about the fighter pilots. Fighter planes, I mean. Happy about the fighter pilots, not thrilled about the fighter planes. But see how that yellow arrow disappears? It's because the bar is still live. So just don't... It's warning us there that if it closes bearish, it probably will have one. But we don't know until it closes. And you can't enter until it closes. But see how slow and grindy it is up here at the highs? Like, if there were a bunch of trapped traders, like, you'd expect some urgency here. I would, anyway. Like, everybody knows that high is getting taken. So, like, why is nobody taking it? Right? That should be an easy high to sweep. There should be liquidity behind it. There was an aggressive seller here. They should easily sweep above this high, and yet they can't do it. Right? And that's strange. It makes me not trust the price action. I don't like those little tweezer tops where both bars have the exact same data point, like the same price. Like on the candle charts, it looks like this. I don't like these poor highs at all. I hate selling those. Hate. Because it very rarely works. It might work for like 5 points, and then they come steal your stop and then roll it over 50. So I would much prefer that it gets taken out. On ES though, oh shit. What did I do? On ES, it actually looks really good for bears. So, I mean, it is what it is. And I'm watching ES up here with a new idea. I'm getting too many signals, but I've got a new idea there too. I don't know if it's going to work on NQ, but it should. Yo, there we go. I did get it. Well, it's got to close bearish. Yeah, I've still got. I'm getting. It's firing too often. The background here is firing too often, but I'm not going to go into it today, but it's a new idea. I don't know how it's going to work yet, but I've seen it work at tops and bottoms. I just have to figure out how to make it filter out the ones that I know for sure don't make any sense. But like, I'll show you real quick. So it's a very short term, but see how this one's got the brown and it's at the top, right? It's probably going to get a rotation lower. And see these green ones? This is not a bottom, right? It's actually a down bar. This is a down bar. But this one's at the apex. It's like after the move down and it's coming back up. That one usually gets a lift. But you don't always know. Like, they could still work even if it's not the apex. Like, this one's not an apex. It still worked. But like here, so the one that I want in this case is bullish at the lows, right? So I wouldn't know for sure that I want to take this, but once this one got beat, I'd take it. Because this is a bearish bar. So I'd be like, okay, I'm going to wait until that bar gets taken back. Okay, there we go, I'll take it. But see, this one, it's not anywhere near a high. It's not resistance. Oh, did it just shift? Oh, that's not good. Why did that happen? Shouldn't be repainting. If it's repainting, I might have to fix it. That's interesting. Why would it be? So I've got it copying from a different chart. That would be a problem if it repaints. Then I gotta fix that. I could have sworn I saw it just repaint. Is it just because I moved it, or is it that bar is still open on the other time frame? Oh boy. So I might have to fix that one. It's a new idea. No, the bar's clearly closed. So it's copying it from this chart, which is a totally different type of chart. And I don't know how well that's going to work. I've never done it before. But I'm experimenting with it because what I want to do is I want to take that, and then I want to take that, and then I want to incorporate this point and figure chart, because right now I've got too much information here, right, to really find useful. Oh, you know what I can do? I know what I can do. What if I put it here first? Sorry, I just had an idea. Study price overlay. I'm just going to try something real quick. It'd be neat if it worked. Settings. Hold on real quick. Oh shit, did it break down? Fucking A. Where is it? Oh, that's right. I changed it. So it's like a 500 delta or something. 1,000 delta. 2,000 volume. Is it this? Fuck. I don't remember. Hold on real quick. That's not going to make sense. Hold on. This one. What number is this? Number 28. Did I? See, I did get it. Let's take it. It did. See how it swung up here and then it closed bearish? I'll fix the other thing in a minute. So I want my stop to be above this. I'm short. I want my stop to be up here at like 47. It might not work, right? Like, realize that we are fighting the trend here, but we're gonna attempt a little scalp to the downside. Let's see if this works, and then I'll fix that thing. Let's just see if I can get a quick couple points here. I'll try for 10 and then see if I can get 15, and then I'll just leave a runner. If it wants to break down, that's fine. I don't expect it to melt down. I just basically want to get 10 points. You know what? I'll take 2 at 10, and then we'll leave one runner. Rather than going 8 and 12, I'll just take 2 at 10. I think I can get 10 points here. I have no idea if I can get 20. So let's just see if I can get 10. And then I'll be 2/3 out and I won't be worried about the runner. Almost there. Oh, come on. 1 point. Within 1 point of exiting. Well, within 1 point of getting filled on 2/3, I should say. Again, this volume zone oscillator has not gotten to 0, so it's aggressive. The sell is aggressive, and it might not work. I got 9. I entered on this up when this was bullish, so I had 9, but I didn't take it. Here we go. Oh, 1 tick away. Come on. Come on. 1 tick. Really? Really? 1 tick from filling. Wow. That's frustrating. All you can do is wait, or move your target lower. That makes sense because they got within 1 tick of it. So either they're gonna melt down to like 21, or they're gonna bounce it. That sucks. Literally missed by 1 tick. That's where I want it to fill me. Now it basically has to melt down, and then it's gonna fill me right on the way out, down if it does. But it's okay. That sucks. 9 points and 3 ticks, but not 10. I was just a little bit hesitant to enter, and I missed a better entry. And I rather than limiting it, I just marketed in because I was like, oh shit, that's it, and just hit it. So if it misses it by a tick, it literally was just because I was being a little bit lazy and distracted, rather than putting in my order and getting filled on the offer. I got filled on the bid, and that if it misses me here, it missed by 1 tick, and that would be that's the spread. That's what happens. But we'll just let it play out. It's okay. If it fails, it fails. It's not the end of the world. It was literally within 1 tick, though. But hopefully that makes sense that, like, if this was the first drop of, like, a bigger drop, it already went all the way there, right? It already closed that bar. And it went, like, just a little bit lower and then rejected. And so chances are, if it goes lower, it's not just going to stop 1 tick below that. It's probably going to fill that bar. So it makes sense at this point to actually move your target lower if you're going to stay in the trade, or just get out, because chances are it's not going to drop 1 tick below where it was before after this bounce. It's going to go a little bit further. So we're going to pull it down to like 25, because we might as well, because they're going to give us free money basically, because we already, yeah, or they're going to stop us, but we're going to get paid for the extra risk we took right here. Oh, you bitch. It missed me by 2 ticks this time.
Order
There we go. Okay, got it. All right, order filled. 2 out, 1 in, and we'll just see what happens. You know, I'm not gonna move my stop. I'm just gonna leave it alone. And if they trail me out, that's fine. I'm already up $500. So, but still short 1. So let's see what they do. That little dashed or dotted, line there is it's like a developing point of control, but it's based on like a time frame, not a Renko. It's putting it on this chart, but it's based on a time frame chart. So it's gonna, these big moves here are gonna be when like the clock like moves to like a new hour, or a new period, I should say. It's not on the hour, but like a new period is gonna shift it like this. And interestingly, those a lot of the algos that like do like high frequency trading will get triggered into trades like right as the hour shifts or right before it shifts. And so you'll get these like rogue waves, you could call them, where bulls were basically finished, but buyers suddenly, or algos, not my algo, but like high frequency trading algos, as the hour or the period ended, algos might have like suddenly sold, and then in response everybody buys it, right? But it wasn't like natural. It was just in response to this time-based pullback. And hold on. And yeah, so that's it's something to watch, because when you see these kind of moves, where you get the move right at the hour, or right before, like maybe 3 minutes before the hour, and you get these attempts, especially when those attempts fail. See how like that attempt to short right at 12 Central failed, right? Chances are, if you can then trap buyers up here, this low can get taken out. So I would definitely put. I don't think it makes any sense to put my final target anywhere above 11,200. Is what I'm trying to say, because it's just taking advantage of the fact that we know that the high frequency traders and a lot of other traders use time based charts to make decisions. So when you get the time shifting, the period shifting, and you get these big volume shifts like that, like, you don't want to immediately fight it, but it's not unusual to bring the market back to here after that. Now, you don't know if it's going to be the first, you don't know if it's going to be here or here, right? You need more information, but this should generally be your target. Maybe an apex, like a low near wherever the volume was before that period shift. So if I wanted to have like a really reasonable target, maybe put it at like 11,183, and it might get hit, right? I'll do it. We'll put the sell at 11, the cover at 11,183. We'll see. That'd be awesome if it hits. But I'm already up, whatever that was, 12 points or something. So I don't really care what happens, but this big volume shift happens right at the hour. Doesn't matter what hour it is, really. Well, unless it's the period that like starts like London Open or RTH close or whatever like that. Like maybe it doesn't. It might not work then, but in just your typical session, right? Like in mid session hour close, particularly on the hour, or like just maybe 2 minutes before. If you see this, like they're gonna come back and test this a lot. The hard part is you don't know when. They might take this high like they did, and then shift, and then take that high again, and then come back here. Now, what's interesting is you want to watch what happens when the market comes back to test this, because if it comes back to test this and it bounces like 185, that's actually really bullish, because there's like a magnet basically on this developing point of control, and that magnet should attract price. And so if price tries to get there and it gets aggressively defended, chances are price is not going lower. Whereas if it goes right through it and like goes to like 11,170 or something, well then you probably want to be looking significantly lower for one of these little swings to try to potentially have like a retrace, and then you could maybe look for a rollover when it comes back to that price zone. So in other words, you'd see, I could probably find another one. Right, 10 o'clock. Okay, so here's one right here, right? This big shift right at 10 o'clock. See that? Not every hour is going to do it, but sometimes they will. So look where price was before that. Oops. Before that. Before this big move, before this big move, we have volume down here. So that how it was like dotted line for a long time, shifted up a little bit, dotted line for a long time, right? That's where price wants to get. See that? And then after that, Or, well, it didn't really spend any time up there, did it? Is there another one where it like flatlined? Maybe right where it is right now? But it never. I guess you could say this one or this one, but it didn't. It really didn't have anywhere higher. But that's the obvious one. And so then you would come down here and you'd say, well, after this shift, that was like unnatural, just like algos, right? So they're gonna want to check on this. Whatever that was, the green line, right? It's I don't remember which green line it is. Not this one. They're gonna want to check on this. See how long they had volume there? That's like pretty significant. See that? This dotted line was there for a long time, right? They left the area unnaturally. Right here. Right in the hour with all these algos hitting. They're going to want to come back here and make sure there's still buyers there. And when they find an aggressive buyer there, they can lift. Isn't that neat? It's like you're just... Everyone loves to talk about like, oh, markets are manipulated by the algos and stuff like that. It's like, you guys... Yeah, I'm short right now, Ronnie. Sorry. I am. I think that's you, Ronnie. I am short right now. Yeah, everyone complains about like manipulation and the algos and all that stuff, but it's like just figure out what they're doing and then exploit it, right? Let's see. Oh, nice. Yeah, I just got your WhatsApp, Ronnie. I see that. Yep, I agree. I was looking at the footprint as well. It sometimes the ES footprint is easier to read than the NQ footprint, and it's often similar. But look at the ES footprint. Whoops, that's too big. But see how all of the volume up here, more or less, is buyers, right? And we got under it. So the idea is, or at least it was, we had a similar situation up here where all the volume was where this purple is where all the volume was, and they then shifted volume below that. So as they come back up, if they reject it with an aggressive signal, it's what people in the room call a DVP short. So it's a drawn volume profile short, because wherever wherever the high was, you draw the volume profile to the high, and you get where the VPOC was up to the high, and then you draw it to the low, off the high. And when they're together, see how they're together? So the VPOC on this little thing right here was down here, right? So I needed to get volume below that. But then if you look at the actual profile, it's kind of hard to see, but it's blue. But see how like a ton of buyers were up here in this wick, right? Which you need. And then you need to get volume below the actual volume profile, the drawn volume profile. And then you need to see them reject with a strong signal, an algo signal, at the point where all of that volume was. It's not always the VPOC of the bar, because it's like over multiple bars, right? But you can see it on the volume profile. It's like big old spikes, or you can also see it you can clearly see it on the footprint. It's very obvious on the footprint. When it's a good one, it's very obvious on the footprint. Yeah, look at that. Oh, geez. Sorry. Can't see anything now. So see all this volume up here? Right? This. Once they reject it, if they come back up and they sell it there or near there, it's probably going lower. That's the idea. Does it always work? No. Right? It does not always work. But it works often enough. And I got 2 contracts off. I just left 1 runner. So I got 12 points off it. I don't know. They might come up and sweep this. They love to do that on the shorts. They sweep them and then they
order canceled.
Yeah. So they took the stop. So I still made like $130, but a little irritating that Could have been 500 if I would have just taken the 12 and been done with it. Okay, let me go grab a drink, you guys. I will be right back. I'm just gonna pause it here and mute it. I'll be right back. Give me 2 minutes. Yeah, I'll let you know in here in case someone comes in right now. So like I don't know what's gonna happen now because they busted that, right? I got paid and then they busted it, so they could just reverse it. We don't know. So we just wait, reset, right? So it's a good time to take a quick break. So I'll be right back in 2 minutes. Oh, is this not working? There we go. All right, be back, guys. I'll leave you some music. I'm back. Not surprisingly, they swept the shorts. They love to do it. And then what I would definitely not be surprised about is if they decide to then roll it over now that they've taken all the stops. But you can see on the 24 tick, we got this blue with the blue X with the blue arrow, right? And like I mentioned before, unless you've gotten evidence to the contrary, that is generally a sign that that the buy program is on, and so you don't really want to be short. So I was thinking about this just now, and I think if I see those X's and I'm in a short, and especially if it's like a reversal, right? Like it's been bullish, but I'm trying to catch the top, or more or less, that I might just want to cover if it gives me an opportunity. I don't think I want to cover immediately, but if it starts to break and test underneath this, the thing is that an aggressive signal underneath it back up to the bull side is usually a buy. So it's not always a buy, but that's usually how they set up. Like they get underneath it and then they rip. And so this might be a good spot to actually cover. I'm not sure. And then the tricky part then is, well, okay, then what do you do about the short then, like, or the short idea? Like, is the short idea busted? And I think the answer is no. The short idea is not busted. It's just that the liquidity is probably going to get grabbed. And then what you could do, I suppose, is you could mark this zone down here, and you could say, I don't really want to be short unless we can either break and hold below that, or unless we can get so far up and then roll over that can be my target. Because this is the area that you'd expect the buyers to defend this. Once I see that X there, it's an indication that there was a lot of buyers coming in there, compared to like what I would normally expect. And yeah, when they extend beyond that and then come back to it, they don't always hold it to the tick, right? It can go under it and come back up, but if they recover it, it's bullish. It's usually bullish when you see it, but you know for sure if they've defended an attempt to break it, you can be pretty confident that the bears are trapped, basically. Where it gets more confusing is when you get the inverse signal as well, because yeah, that's a little harder to interpret. Thankfully here we don't have one on this time frame, but like here we got the inverse signal on the 15 tick. Remember, this is a tiny little tick chart, and that said, small rotation down likely, but it had an arrow, right? And we had this set up correctly for this to be a short. So if this is an arrow on the yellow arrow on the down bar, that's technically a short on that tiny little time frame. But I'm not usually trading that tiny little time frame, because when it doesn't jive with the higher time frame, you get a lot of stops. So we'll see. So it hasn't necessarily triggered short yet, but if this closes down here, it looks like it will. And so then what I'm curious about is, will this trigger short? Well, the only way this can trigger short is if this was the high. Oh, the VPOC is right at the high now. It might trigger short again. What I really want it to do is come down, get volume down here, come up, and then reject. That's what I want to see. And I mean, I made $130 doing it before. I might as well try it again. But on the you might be able to see it better on the footprint. There was divergence at the high. Oh, that's the ES. NQ chart triggers. There's probably. I'm not sure if that's divergent or not. I can't see it. Cumulative delta had flipped here. On this actual bar, it's not divergent, but if you just look at it, you can see that all the sellers were down here and all the buyers were up at the highs. And then they tried to rip it down, So that might have divergence on it too. It depends on the time frame that you're looking at and what kind of bar you're using and stuff. Okay. Hold on real quick. Oh, I see. It's coming through the. Sorry, I knew I was getting messages and I was trying to figure out where they were coming through. Yes. Go up 12. Well, 10. Because it was 8 and then 13, I guess. So more like 10. Okay. So we'll see. Now remember, it's not bearish unless they break down. We're not going to guess that just because the volume's up here that they're going to just rip it down all of a sudden. Like they remember what I said earlier with the candlestick chart. Like they can take this high without much effort. It's this that I don't expect them to take very easily. Right? They can swing that. They can get that opening range high. They usually do, right? They usually either break the. Well, they've already broken the opening range low, didn't they? They already broke the opening range low. So I guess you can't say that. Can't say that for sure. Okay. But there's not a whole lot to do here unless if you identified that it was long and you were willing to be a buyer up here, and I'm not, then you could try buying this one after the blue with the arrow. But there was no arrow, so it's very, very, very aggressive. But you got 20 points, and that's not that unusual. But it's just interesting that on the smaller time frame, you got basically the exact opposite. Oh, interesting. You got red with an arrow. Stop it out. Yellow arrow. Bearish. So this 15 tick is short. I'm not usually trading the 15 tick because you have to be really fast. Like, be taking profits at like 6 to 8 points on NQ. Like, you usually get, when I say it's short, it means you usually get 2 bars to go lower more often than you get it to go 1 bar higher. So they'll usually get to 12, 11, 2, 51, 75 before they get to 69. Like 65, 70% of the time. But whether or not they get all the way down to 11, 2, 40, I don't know, right? And I don't really want to be trading if I don't want to be getting short here if I'm not sure if they can actually even get to 40. But it should get to 50. So you can do it. It's just you got to accept that if you don't take profits at 6 to 8 points, you're not going to have a 70% win rate. You know? Whereas, like, yeah, it's not unheard of for us to get near that. I mean, I'm up. I've got 66% win rate, so that's pretty typical, right? Now, but as you saw, my fills are like 8 to 10 points, right? So, and remember that like one of those quote unquote losses are actually just runners, you know. So it's not even that the trade didn't work. It just I just held a runner because I was willing to give back $400 with the opportunity to make 4K. Right, so it's like people balk at the idea. It's like you can't get a 60% win rate and get like 1-to-1 risk reward. That's not a thing. It's like, oh no, it is. It's just the question is do you want do you want to have the chance for the 2-to-1, the 3-to-1, the 5-to-1? Like, do you want to hold for the chance to get the big trades? Because if you do, it's going to be hard to crack above 70%. But if you're okay just taking 10 points every day and trading it with higher, as much leverage as you can and being done and occasionally getting 20, but not even worrying about the really big trades, like you can literally crack 70%. I totally just saw this shift again. So it looks like it can. I know that the one that's live can repaint, but it looks like the way I have it set up right now, it can actually repaint. This overlay can actually repaint even earlier ones, and I'm not okay with that. So let me see if I can fix that. I've never seen that before, but this is a new signal, and I don't know if it's because of the overlay. It might be, but I'm curious if it happens. Let me see, because this one just shifted, and that, as far as I know, the delta on it. Let's see. Yes, simplified. Where is it? I've got too many damn things. Trap traders. Yes, order flow simplified. Yeah, it's clearly a closed bar. Okay, so we're gonna try. Rather than doing this, we're gonna try it like. That wouldn't make sense. Let's do Renko. What if it's the same? We'll make it identical to this one. They'll move for a minute. There we go. Now they should stop moving, stop flashing. If I'm right that that's the problem, that it's like moving it because the time frames don't line up. But that was the whole reason why I liked that idea. And if it doesn't work, then I'm gonna have to. I can't have a system that repaints, like not after a closed bar. I'm okay with it warning me that it might paint and then not painting, or even painting a little late is okay. But if it was green back here and then it goes 10 minutes and then it's no longer green anymore, that's not something I can work with. I can deal with it when it's the live bar. I can't deal with it when it's a closed bar. So if overlaying a study from a different time frame causes it to repaint like that, I'm gonna have to figure out another way to do it, because that yeah. Interesting. So someone in the room is pointing out we had a nice big wave on the 15 tick that, remember, it kept me from buying this. I said I would probably buy, but not with such aggressive volume, right? And the result was they bounced. Right? I said that was too aggressive for me to buy because of this, which is fine. But when they bounce off of that, and on the bigger time frame, that volume doesn't become dominant, the result is rarely lower. I like it. That's cool. Okay. Monster drink time. These revives are good. I like them. Or wait, what are they called? Rehab. Rehab Peach. Notice on ES we're running into a Buddha range level again. It almost looks like a Head and Shoulders, but I'm not just gonna blindly sell it, right? But it would be an explanation for why they struggle here. Oh, notice they made a new high. So we would have to set up this potential short, we'd have to move this volume profile. It needs a high and then it needs to pull back. So that's no longer relevant. And it turns out this X with the arrow got stopped out, and came back with no arrow. But on the smaller time frame, it was different. We had blue X, red X, rip, right? And that's where it gets tricky, is this. And then there's no algo here. So, yeah, you just have to take the fact that these came with the blue arrow and it stopped out and then it came back in. It's called a trap back in. You could do it that way. But the problem is, in my opinion, is the X here made this whole area look like it could be a battle zone. So I would prefer to wait until you get a pullback. And that pullback just did not reach it. It reached this, but it didn't reach the battle zone. Oh, was there another X there? Oh, way back here. Yeah, so this whole area here we can probably spread that out to like the VPOC of that. That whole area is very important for buyers to hold. And like I said, if you want to be bearish, then that should probably be your target because they might bounce it there. Oh, you know what is interesting? On the smaller time frame, if you look at volume zone oscillator, we got the first oversold, that red line, right? And then rip and then down over under zero line. That happened here. And they showed the red X was already activated. And then we got a blue X, which is weird. It's usually the opposite, right? But and then this is actually exactly the opposite as well. So this red X got beat, then you'd expect this blue X to get beat. And so when the red X comes in, my thinking would be we're going lower, right? And you have this big bearish volume. But I'm wondering, because they couldn't go lower, this wave here trapped sellers. And where did it trap sellers? Probably right there. They tried to get the continuation. So big wave down, bounce, red X, and then sometimes that's going to be sell. But when it's not, and instead they stop it out, it's, if you look at where this bounced, it's right on it. See that? Look. Right there. Right? So it's possible that there might be a setup there. It just needs that specific scenario where you have a dominant wave on the smaller time frame down. Then they save it. They try to turn the sell on, but they can't get it back down here. See that? They bounce it and they can't get it back to the black. And so once you see that, you know it's bullish. See how they bounce it? Right? They can't get it back to the black, even though they had a dominant wave. Interesting. And they haven't since. So the opposite of that would be big wave up. But then after they leave the area, did they break the zero line right away? Hold on. Let me make sure I'm understanding this right. They did. Okay, so they came right back up, bounced off the zero line, gave the red X. That red X got beat. They came back into the red X and printed a blue X with a dot and a diamond. You'd think that's the entry, but they went one more time to trap back into that. Just to be sure they got everybody out who was long. And then it went. So it would be this, break below, then come back up, fail to break above this, and fail to break above the green area, the neutral area, and then roll over. So when that doesn't happen, when you've got a dominant wave, and either they don't break below the zero, or they break below the zero, but they can't get back to the the black, that might be the trade. Let me see if I can find something similar here. Because that works on the smaller time frame, it should work on the higher time frame. Okay, so they got overbought on the volume zone oscillator. We got an arrow, right? If they can get below zero, we've had a red X on here already. If we can get below the zero line, It's bearish and retraces should be sold, but that's on this tiny little time frame, and there's no dominant volume. So if we are looking at the same exact thing, the dominant volume wave here needs to be the last time that they get to the black. Let's see. All right, let's see where this volume was. Right there. We need to get under that pink line. This pink line here, we need to get under that to trap these guys. See all the volume up there? These guys can get trapped if we can get a bar that closes down here with the yellow line down there. But it's got to be a bearish close. And it really shouldn't be purple. Because a purple bearish close just means price drop, but nobody really did anything down there. We want to see them aggressively push. And then hold up here. And the other setup would be rejecting this black here. Oh, but it didn't even hit the 0 line. I don't think this can work. But some sort of combination of watching or signaling off of the 15 tick and then waiting for the trigger on the 24, or vice versa, waiting for the signal on the 16 tick, on the 24 tick, but the final trigger occurring on the 15. I think that is kind of your best case scenario for a very consistent setup. Is this where I still can't tell if this is painting or repainting or not? It's supposed to be identifying reversal areas. And there's just too many signals. So I have to adjust that. What if yeah, see this makes that's a good one. That's where I want them, where it comes all the way down. What if I just say, let me try something. What if I just say, for this one, is bearish, and then do there. That might clean it up. I'll miss some, but I won't get as many. Oops. Okay. Does that help? Okay, these brown lines, I want them basically at the tops, and I want the green lines at the bottom. Obviously, the chop zones are going to get tricky. Yeah, see, this one was not where I want it. But I guess it might be okay. Yeah, I'm glad to see that we're not getting a ton of them everywhere. This one, so it looks like we need to go lower and then recover them. Interesting that it's here and not here. Okay, so let's try. That. Does that fix it? So now we're at a different time frame, but still Renko. Will it? Oh, it just disappears. So no. That's not helpful. Okay, what if I go? A lot bigger. Does that fix it? Oh, it just disappears. That makes sense. That makes sense. Okay, so at that level you barely see them. Are they good though? Because if they're good, it might be okay. Like that's not bad. That's not bad. The browns would be like sell if you get lower, and the greens would be buy if you get higher. This. So sell if you get lower. Yeah, that works. This you're not getting lower, so that's nothing to do. Sell if you get lower than that. Right there. That kind of works. Okay, so they don't show up very often at that level. And then if I do this, this is way too many, right? I'm guessing they'll be everywhere if I do this. Yeah. Yeah, and see that's not what I want. See, I'll get messed up by that because it does get lower, but doesn't get volume lower, and so it doesn't work. This one's good. It gets volume higher here, and it's good. This one, it looks like this should do it, and it needs like one or two more. And I don't like getting it so early. And look at all of them. Like you get them over and over again here. That one should have worked, and it doesn't. See, that's not going to work for me. So some sort of happy medium in there. That's interesting that we're getting bull way up here. It still works as a sell signal though. That's kind of strange. That might just be an unusual. I can't imagine that would normally be the case. Could be wrong. And then this is okay. Okay, let me back up a little bit more. Man, I misjudged this completely. Like I said, the price action, the choppy, slow price action is very hard to read. But I missed this. See, this is weird. We're getting like a sell at the lows. I guess you just don't pay any attention to it. But I wonder if I can say, don't tell me about it if, like, see, this is where I want it. So in this condition, what you're going to see, I bet, is volume zone oscillators higher, is what I was thinking. So I might be able to add that. That might do it. Let me see if that works. So these I could filter out because volume zone oscillator is too high. I don't know if that's a little simple, but like these, I don't like. I mean, that one would be a good bull signal. It's not a very good bear signal. This one obviously is not going to work, but oh, that one does have. Oh, but it's. See, then I'm going to miss out on the really big moves if I do it that way. Man. Yeah. It's going to need some more experimentation. It's like it almost doesn't show up enough now. Okay, what if I do reversal bars? Oh, I could try the point and figure. What's the point and figure here? 10? Yes, 1/8. What about 1/8? Box size in ticks. That would make sense. Oh, well. Get a lot of them at the lows. Yeah, like every rotation. So like, yeah, you'll get it. Like it's in the right spot. I like how I'm not getting them except for on the pullbacks though. I would know not to take that. Sure do get a lot of them. Where are all the bear ones? What happened to the bears? I don't see any bears. There's no more bear signals? What happened? Something's not right. Something's not right. Hold on quick. Do I have that reversed? Nope. It's right. 1.8. Okay, so what if I do like 10.8? Is that like totally useless? Box size in ticks. And then reversal size. Oh, so, okay. So 2-point reversals, but only every 10 point. Oh, so I want 8.8. What does that look like? Oh no, sorry, 6.8. What would that look like? So same tick size, but not Renko. I don't even know if that'll work, honestly. I don't get a single nothing. Okay, so what about 6 of 4? Just trying to understand how this is. Okay, so there. That at least they show up now. That is the spot I was thinking that it should be there. Why aren't the bears showing up suddenly? Oh, because it's not Renko. Because it's not Renko anymore. Now it's point and figure, so it's... Okay, so hold on. I know what's wrong. It's not Renko anymore, so I can't use the... So what if I do this? I think this is causing problems. So... Does that still work? Oops. Now do I just not have any? Oh, nope, the bears showed up again. Oh, okay. So the bears are working, but not the bulls? What happened to the bull ones? Did I make a mistake on that one? Because now I don't see any bulls. What in the world? The bulls were working even with the Renko. Hold on, so if this is Renko, or, let's do this. Do they both show up now? Bear. I might have made an error on the bull one. Hold on. I think, see, but it's moving, and I don't like that. I might have made an error on the bull one. Yep. Okay. There we go. Okay, so now let's go to the point and figure. And now let's do like 6-4. And once that loads, okay. So that's the cell. Well, that's not bad. Oh, did this set up? This fucking set up and I wasn't paying attention. Oh no, it didn't. It didn't get, it's gotta get volume under here first. But then that is exactly what we want to see though. So cell is on, and see how volume zone oscillator, oh, it's got to get through 0 now. And then we'd really want to retrace with another one of those arrows. This would be the very, 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 very aggressive way to sell it. I'd prefer to see it get down and come back up. I don't need to enter right there, but let me just check and see if we have that condition with that. Yeah, see, this is the big up wave. So if we can't extend beyond this, How does this work again? If we can't extend beyond it, and I think we would need a dominant. I think we would need a dominant sell wave on this time frame too. But dominant up wave, if we can't extend beyond that, then you would look for opportunities to sell up here. Just like down here. The dominant sell wave didn't go anywhere. And so they bounced it. Dominant sell wave doesn't go anywhere. Where was that? It was earlier. It was really obvious. There. That was it. That one. That dominant sell wave did go somewhere. It wasn't that one. Where was that? It had to be. Oh, it's not the right chart. This is ES. Okay. Wow. So see how it's like blue, red, blue. So this is especially with the smaller time frame. This is where it gets confusing. So it's saying this whole area is important, right? The bulls try to take it. They get momentum shift down. Now we're getting underneath it. And so now buyers need to respond here. Otherwise, it becomes resistance, is the way I'm looking at it. So buyers try to respond. Do they get an aggressive response like a star or a blue square? If they do, you can try to buy it if you think it's still bullish. But the higher time frame says caution with this X. Right? And this is kind of scary. Looks like it's not going to stay in the black. But this smaller time frame, it needs to hold here basically. Otherwise, probably back to here. Let's see if they get an attempt. Note here they did get overbought on volume zone oscillator. They did go through the zero line. So we should be thinking lower. But we don't have a dominant wave up. Or sorry, down. This was the last dominant wave, but it didn't go anywhere. So this is the exact scenario only in reverse that we had before, where the dominant wave up is at the high. It doesn't go anywhere. And so the result would be a pullback into that area that gets rejected as long as this volume zone oscillator stays, I think, in the neutral zone or below the neutral zone. But otherwise, you'd have to, I mean, you don't really want to aggressively sell this. And I don't really want to sell the breakdown. Although at this point, we do pretty much know it's bearish. They would have had to save that, I think. And note here, the up wave that's dominant is not the dominant, the wave to the high. See that? This is not the wave to the high. But all the volume, because it went a little bit higher, all the volume is right there. And we've definitely now put volume below that, right? So any retrace that then gets rejected and they try to sell it, any retrace should be sold. That's the gist of it. Is at this point, a retrace that gets an aggressive defense should be sold. And on ES, we did get the reversal signal. And it was followed immediately by an X with a star. That's cool. I wonder if that's an aggressive entry. Let me see if that works elsewhere. See, this one doesn't have the star and it doesn't work. Well, the star came before it. So it wasn't at the apex, in other words. These are not at the right apexes. Not at the right apexes. This one's, you don't really know for sure. But when it comes back with the X, it does lift. It might be the X you need. Low star rollover. They might not get the retrace, you guys. We might miss this. That would suck. You just had to be really aggressive. The price action's not been ideal. Oh, is that as far back as it goes? Is that what's wrong? I haven't loaded enough bars on that other time frame. Okay. Well, that sucks. And we just get so many signals here, and they're not in the right place. Like, I don't like all of this. So let me try, what's like 610 look like? Now that I've got it correct, can I clean this up and shift them this way? Oh, they just disappear. Oh, they're just gone. Okay. Alright, so 10 is too many. How about 6, 6? Does that look okay? We want them to bounce here and reject. Okay, so that's got the star, and it tries, but then it fails. And then this one does not get the star after it. But you could say it gave you a... It looks like this is a very small time frame reversal. So we're probably going to get lots of them. Although I don't see any buys anymore. What in the world? They keep disappearing. Oh, there's one. Star underneath it, and that lifts. I don't know how often that works. I like how I'm not getting a lot of signals, though. That's definitely nice. There's one. Not in the right place, but you get under it, find an aggressive buyer with a diamond and a green bar, and it lifts. This one way too high. The green does not do it, but the X does. Okay. And this X works. That seems to be your best case scenario. Come on, push it. I want them to push it up here so I can sell it. Not very many. Alright, so maybe just a little bit. Oops. Yeah, let's try smaller, I guess. Or we could go bigger on the box size. That might solve it. We're getting closer to the number of signals I want. I'm just not... It's either too many or not enough. Okay, I went too far back. Okay, there's one. It doesn't really do anything. Why is it happening on down bars? That's interesting. I guess that's just the way it's being interpreted, because it's a point and figure chart that it's coming from. So these all don't give you anything. And then you don't get the low. Like, that doesn't really seem to work at all. And then you don't get any signals when you want them. So we've gone from having it work kind of to now barely even showing up, and then when it does show up, this one worked, but almost luck, because we didn't get behind it or anything. It just turned. That's the first one that's a down bar, though. I'll give you that. Okay, so let's try going higher doesn't help, right? So maybe put 4, 8. We'll see it we'll say every box is a point, and you need to reverse 2 points to turn it. So those aren't coming at the apex. And that's not surprising, because it's not a Renko chart it's coming from. Okay, so we got one green bar, but we didn't get anything else. I want it a little higher. I don't know if they're going to set us up. Oh, there we go. Lift. Lift. Yeah, this doesn't seem to work at all. 4, 8. Okay, what about 2, 8? 8 might just be too many to beat the reversal. That's probably the problem, is how many it's needing. Oh, there. Oh, all of a sudden they show up at 2. That's weird. That's weird. Why would they suddenly show up when you only need 2? But they're not there when you have 4. Okay, in that case, what does 4-4 look like? Or 1-4, something like that. 4-4. Mm, that's pretty good. Yeah, that's tricky. On the pink bar, on the aggressive down bars, they seem to work. Not, yeah, these are on purple bars, and these do not work. Oh, they're going the opposite direction. Weird. And then the X underneath it works. No X underneath it. X above it works. It's just, yeah, and then X above it on the purple bars. That's getting closer. What about if I do like 6-4? Does that help? I just don't want so many damn signals. So it needs 6 to print. Oh, there we go. Needs 6 to print and reverses if it goes 4 in the opposite direction. It's kind of a weird chart, but oh, there's just so many in the wrong spot. Like we're dropping and they're giving sell signals. I don't like that. Obviously, you can't just use it by itself, but if you did try to use this, I guess what you need to do is wait till you get above the green one or below the orange one. But then you might end up selling down here if they get the aggression. Okay, so what if I make it much bigger, like 10-4? Then do they, whoops, do they totally disappear? 10-4. What does that look like? I'm literally just trial and erroring, trying to see if I'm getting better signals or less or worse signals. And here I think the signals just go away. Oh, there's some. Super early. I don't think we're going to get set up. It'd be very aggressive to sell it now, but the shorts sometimes just are harder to get to hook up. But we want to sell it here. But I don't know if they're going to set us up. I just hate how it's just grinding here. You'd think if it was going to sell off that it would really sell off. Okay, what about 110? What does that look like? Oh, okay. Right now it says potentially if it closes bullish that this could be an important rule. But look at how this one gets totally ripped. That's an up bar. I don't think the 1 works in the beginning. So this needs to be at least 2. And then 4 is almost too many. That seems to be the problem. Oh, there we go. Let's see if that continues to consistently be the top. See that? Yeah, that's unfortunate. Ugh, I just hate how many you get on the down. But you can see if you were ignoring it on the down and just looking for the reversal, it's giving it to you here, which is a little early. You don't have to wait for the trap. So let's try, what does 410 look like? Oh, nothing. Well, this is exactly where I would expect it, is after a push like this. Okay, oh, we get a nice one there. Let's see, does it show up earlier in the day? Maybe it just missed it there. In which case, I might be getting close. Yeah, see, I want it here, but that's the right idea. I'm not sure why it's showing up way up there. And yeah, that's not good. But you do get a scalp. Hmm. And that's it. So when this is 10, you really don't get much at all. So what does it get with 4, 6? Oops. Probably a whole bunch of signals. It's so boring. I've got to keep myself occupied with coming up with new ideas instead of actually trading. There's just nothing to do here, you guys. Like, look at this. It's just going nowhere. And I do not recommend being super bearish and shorting when it's not going anywhere. Like, shorting dull markets sucks. Oh, that's interesting. That's the wrong direction, but it's a good spot. Oh. Yeah, that's definitely bad. But at least it doesn't show up over and over again. This just doesn't make any sense. It might still repay. Yeah, that's not right. Okay, that's closer. I mean, the idea of seeing it and then waiting for the pullback and getting the aggressive buy to get back into it does work. It's not working how I thought it would work, but it technically is working. Oh, okay, that one too. See the orange, wait for the red X or the star, down and go. This one is obviously not the top. But like, if you tried to take this, that would be a problem. This one, see the green, get down, get the aggressive signal, go higher. This might work. This one says, see the aggressive signal, go short. Okay, let's just go like, what if I just do a little bit, like 4, 5, or maybe 5, 5. Just like one tick difference. Does that shift it a lot? Oh, wow. A ton. Like, almost unusable. Oh, but that's interesting. That's nice. And that's nice. And that's okay. And I just hate how it shows up over and over again in the opposite direction. That's okay. Okay, what about 5, 5? There should be less now. Do I lose the ones I want, or do I lose the ones that are noisy? Here we go, it's trying to lift. Yay. Oh. But this one's clearly the one you wanted, so green, orange, lower. Green, lower, and then aggression goes higher. Orange by itself gets beat, it's bullish, come back, and it goes higher. That makes sense. So in other words, if we get over this, then that becomes support, perhaps. That does actually make sense. Okay, what about 5, 4? Should be more signals. Oh man, are they going to reverse it right here? Darn. That one should come back. Nothing? Oh, okay. That's definitely wrong. Yeah, see, that's a concern. This is perfect. Why is it showing up on the opposite side? It's so weird. It's making me think it's not right. I won't know whether or not to take it immediately or to wait. Yeah, they're definitely not showing up on the low like I thought they were going to do. But if you trap them and then come back up, they do seem to work. It's probably the best I've seen so far because there's not too many of them. See, this one, trap, you get, it doesn't really trap back in. This one, trap, and rips. So it's like if you get under them, you gotta immediately get an aggressive signal back to be able to take it, and it's like related to the apex to the left of it. I think you might have to have a blue X before it too. And so this one, it's not necessarily sell right now. It's get behind it, get an aggressive signal, and go down as long as there hasn't been a blue X, but there has been a red X, or the blue X got beat. Like this one's way up here, and it got beat, so it's bearish. But then like here, you would need it to go higher and then take it out, and it doesn't. Here, go higher, take it out with aggression. No aggression here. You did get the red X. Oh, the orange one, I guess, but then that gets stopped out and goes again. The yellows here, the orange one. And then here, this we want to get taken out and go. But it doesn't. It just drops. This one just drops rather than... Oh, but you take it out and get orange down and it does give you a scalp. This one, I see, I can't tell. Is it this? Then it would say short that. Or is it this? Because then it would say short that. Neither of those really work very well. This one, I would think means get underneath this and you can be a buyer. It's sloppy. Okay, let me try. What about like... Delta bars are the ones that were making the... That's what I wanted, but they're making a... they're making it repaint. But this is what it was really built for. But I don't want it to repaint. It's not just not in the right spot, but it does... The concept still works. That's on the wrong side. Not in the right spot. Yeah, I may just have to rethink this idea, because if it's repainting, it's obviously not useful. I just don't want to have to watch all these charts at once, and I was hoping I would have a way to put it on here. This is the way it was built for. Man, they're gonna drop this without me. Irritating. It's definitely it's. See, this is clearly rejecting the zero line, right? And let me just make sure this reset. Yeah. I can't sell it now. I can't sell breakdowns. Not allowed. You don't get very many signals with this level. Let me try 500. What if I do 500? Do I get a ton more or just a few more? Oh wow, are they going to try to save it? Look at that. This is how they would save it. Purple bar star is how they would save it if it's a star. And this said on ES you had the... Oh, it's not there. You gotta start down. I'm wrong. Not gonna buy it. But see, this big bull wave did not turn into a bull wave on... it got overtaken. I'm thinking it's bearish. Because this bull wave didn't go anywhere, and instead they trapped it and came back. Maybe you can just short that right when it happens. It just seems really risky. I'll have to... I'd love if I could get some confirmation that that works. See, that's not right. That's better. Still not very good. See, that's not very helpful. That's okay. I really want it here, though. Okay, let's go further. Let's go like, what's 300? Let's try that. gap fill. No, I don't think I want to change anything else. Okay, we should get more, not less. So I think it's still calculating. Oh, here we go. Okay, those are cells, but they're not in the right place. There we go. Well, that's better. Get the signal. Drop back in. X, go. Okay, those are not gonna work. Yeah, it's going the opposite direction. So you would need to trap back in and then sell, trap back in and buy. I wouldn't buy that anyway. But see how it just shifted? I can't handle that. Man, that's too bad because that's right. This is correct. Why is it shifting around after the fact? That's close. It's got to have something to do with the copying over from the other chart. It doesn't know like which bar to put it on. That's got to be it because it's not the same type of chart. That works. Man, that sucks that this didn't set up right. So on the 15 tick, it set up okay. With the arrow, got behind it, another arrow, red X before the entry. The tricky part was we also had blue X's before the entry. And so what I'm trying to suss out is how do we know not to trust the blue X's and instead to look for the short? And the only thing I can think of is we look at that wave and we say, yeah, it's a dominant wave, but it's all the way to the high. And so it's not support. So instead, what we should be looking for is bearish trades for reversals. And if there is a red X here, you could have a bearish trade. I just don't know how to be confident getting in right away after a big bull wave. Because what's the difference between this and this? And you had a red X here, and it trapped back in with an orange bar. I mean, I guess that wasn't a horrible trade. And we did get the X here confirming it. Was that at the same time? It was. Okay. Hold on. So it wouldn't happen very often. Man, so you would have to have dominant wave in the direction of the trend, and then that being the end of the trend. And the only way you would know that was possible is if you had a sign that sell program is on, so a blue X if you're going down or a red X if you were going up on the smaller time frame, and then that same signal showed up on the higher time frame. I can look for that. It wouldn't be hard. I would just look at the highs and the lows of the days and see if that pattern shows up. If it does, that'd be awesome. But I'm not sure it does. I don't know what to do about the new signal on ES. I really don't. It's like it either doesn't show up enough. Here, what if I just make it a little bit smaller? I don't think it'll help. It's like inverted. Okay, what if I just do volume bar and do like, what if I do this? Is that better? Or is that way too many? Ugh. I can't handle all the extra signals. But I think for now this is probably as good as I can get it, is something like that. Or maybe, what if I do it really big? Yeah, really big might work. I wonder if it'll shift less then too. See, that makes some sense. Now they're showing up. Ugh, I don't want so many. I don't know. This one's gonna need some work. Yeah, it just shifted again. This one's gonna need some work. I may just need to find a different way to measure it, because I don't think using the other chart's gonna help. Now, the other idea I had is using the point and figure chart. So what does this look like with those signals on it? Is that useful? So we'll keep an eye on this and see if maybe they give us an opportunity, but I doubt they will. But is this... Does this have any value? There's just so many. And they're not necessarily on the highs and the lows, which is what I wanted. I wanted it as a reversal, and I think there may be a pattern where it works. It's obviously not enough on its own. So what if I make this really big, like really big bars? Yeah. That might be better. That looks good. I mean, and I would know that that's not support, but if I could get it to trap underneath one of these is really what I wanted. This might work. It's not perfect. It's not anywhere near perfect, but it might work. Still a lot of signals on the Renko chart. Like, and that, so this, then trap, then sell. And this one just goes immediately. That's where I'm struggling, is sometimes when it's got the signals on it, it sometimes goes right away. And I've got to be able to if I'm going to use it, it's got to be objective. But yeah, this is just way too slow to short. It's too bad that it didn't give us what I wanted, remember? Once I saw this, I wanted it to come back up and reject, and it just didn't make it into that bar's range. They just couldn't do it. So I had the direction right, I just didn't get the setup I wanted. But the one idea that may be useful is having a dominant wave going to the high or the low, and then failing, like you don't know it's the high or the low until they fail to continue. So see how this is the dominant wave? Like if you look, oh no, it's not the dominant wave. It's not. So the wave at the end needs to be bigger than the wave before it, and then it needs to not continue. And then what the question is once that happens, what's the entry signal? And I think it has something to do like this. Dominant wave up compared to this one. And they immediately reject on the trap back in with the arrow, and there's been an X. But like I said, there's also been a blue X, but we're at the highs, so I wouldn't be looking for a reversal there. So I can see if that works more often than not. If this is a pink bar here, I don't think it will be, but if it's a pink bar here, you could see a little squeeze like this. Yeah, they got it. I don't know if these guys will. But on the smaller time frame, they got the pink. No pink bar here. I don't think there's anything to do, you guys. The purple background and the pink background is a sign of momentum. Generally, when you see it for the first time like this, it's usually not a good idea to immediately buy. Usually, they defend high volume areas. So this is likely to get defended because I see that background, particularly when it's on high volume. It's going to be really, this being the low is going to be tough. Usually the low is going to be after, it's going to be after a series of these by themselves, or like a clump of them like this, and then an aggressive sell. This is not usually what the low looks like, but who knows? Then again, on a higher time frame, they didn't actually get below any of this. So But yeah, I would think they try to hold this here, but they might just squeeze them out. This is where it matters. They gotta if sellers are gonna do something, it's gotta be right here. That'd be funny if they just rip it at the end of the day. That would be funny. But yeah, you would expect sellers to defend here. But I don't really have a setup, unfortunately. Like this red X has actually already kind of done its thing. We do have a dominant wave to the downside, but now it's getting a bounce. So I believe the next step would be an attempt like a red X down, followed by a green bar or a star up or something like that. Might actually be a bounce. What I don't know is if it's off the low or if it has to get above the previous X's like this. I don't know where it shows up. I haven't looked at it long enough. There it is on here. Red X here. So do we get the bounce? Because if we do, it's probably long. As much as I hate it, it probably is. If they beat that X with aggression, it suggests that we're higher highs, higher lows on volume, and we're rejecting lower despite the fact this is a big volume wave. The thing is it's also a big volume wave on the 24. So I think I need an X down on the 24. I think it's the highest time frame with the dominant wave. Because basically what I'm betting, if I'm buying this, I'm betting that this wave up is going to be bigger than this wave down on a higher time frame. And that's asking a lot. Here, let me run to the restroom again, you guys. I drank too much of this monster drink. But yeah, I don't think it's a buy, but I'd love to see what happens if this closes bullish with a star or something, because we have a dominant wave down here, so I don't think it's going to go higher. I mean, I suppose you could just sell this. It's come back to the area, and so if I suppose now that you've got a red X there, if they don't reject it, you could try for the continuation because you do have a dominant wave. I'll think about that. I'm not going to do it. I'll be right back. All right. So you can see we did beat this little red X on the small time frame, but there was no aggression to the downside, and then they followed through with more aggression. You could try to short it here. It's like a pullback short. I don't think that's wrong. It's just a little aggressive. The price action is just really poor. But I wanted my short to come on this first pullback. I don't really like taking it after this, but like I said, I'm a little bit confused by the dominant wave. Yeah, I guess I could try it, but I don't really want to. But I've seen this pattern work before where it's red X and then yellow box, but I think usually the yellow box is higher than the red X. Swallow funny. All right, so we just have high volume on a lower high. That if it's bearish, this should immediately drop. So we're gonna find out right now if this is bearish or not. Excuse me. Yeah, see, extra volume on the way down. That should project them lower. You shouldn't see buyers fighting and sellers giving up, which is pink, after one of these diamonds. That's not typical, because what that is, it's basically saying it's a bar that is the bar is engulfing the previous bar, and there's more volume than there's been in a while. So you can see when if it's like a trend and they show up on like a higher low or a lower high, usually you get continuation because you have a lot of volume coming in with the trend. But when it's not a trend, it's like then they're fighting. For some reason, they need a lot of volume to fight there. Well, they might get the drop after all. But when it doesn't result in immediate trend continuation, you have to ask yourself, why do they have to fight over? Why do they need so much volume to fight over this, and why isn't it working? And so then you can look back and say, like, well, am I wrong about the trend? Is there a trend at all? Is there any momentum? Is it just the middle of the range where like they're putting a lot of volume in because that's where all of the volume has been, which is a common thing to see? Or is the trend reversing? And in this case, volume zone oscillator said that we had gotten a little bit more bullish volume than you'd expect, or than normal, and then they went higher. Then they broke down below the zero line. They tried to get bearish, and they bounced. And so the failure to get underneath this neutral zone, the black here, underneath the green or the yellow line, suggests that we're not trending lower. Yet we potentially had trapped some shorts up there. This was the area where everybody was buying. See all these diamonds? All the aggressive buyers came in here, and that probably means that all the shorts that got stuck are underneath that. So this was likely the response to those stuck shorts, is a divergent bar with a lot of volume, and that bounce. And then they're trying to defend this zone, but I don't know if they're going to do it. I mean, in reality, we're just kind of getting chop, right? But I'm just trying to look at the nuances of like, how hard were they working, and did they get anything for that work? Like, what is each side trying to do here, and how well are they doing it? And the bears are working really hard here, but they're not getting a trend environment volume wise. They're not able to get continuation. Nobody's following in, right? Some people are being bearish, but no one's following them in with heavy volume. And usually the result of that is they get trapped. So, doesn't always happen, but usually the result of that is you get trapped. And I think there might be a trade there. I just have to
dig in a little bit. I'll do it after the market closes, but I want to dig in and see when we have this big down wave and they can't get any continuation, particularly when it happens on the smaller time frame but not on the bigger time frame. Is there a trade set up there? Because if there is, that would be a very valuable observation. So I'll dig in and find it, but I definitely saw it at the top. We had all this volume come in. All of these are all dominant waves. They're bigger than the sell waves, cumulative volume wise. Sell waves are small. The following big wave is the up wave is big, and then here's the sell wave, and then the next up wave is big. So that can continue on and on and on in a trend, but when you get to the high, and that is a dominant wave, it's bigger than the down wave before it, and yet you don't get any higher. That's going to be a problem, right? And so what I need to figure out, and then particularly when that does not jive with the higher time frame, where now all of a sudden you've got like zero volume at the high, and all the volume is on the way up, but not at the high. These guys get trapped, right? These guys here. And so an aggressive signal to the downside in this area, I didn't get one here. I wanted one here. I didn't take the really aggressive one. I wanted a retrace and a sell, and I just didn't get it. But usually you'd think aggressive sellers in this area would result in a rollover, because on the tiny time frame we had a ton of volume up here, and yet on the higher time frame they didn't follow through. And so, like I said, what I want to know is, first of all, is there a way to identify this as a good entry? Because if it is, that's super powerful. And that would involve looking at the smaller time frame and seeing what happened here at that point, and then comparing it to the signal I get here. There might be something there. But then the easier one that I think I'm pretty confident I can figure out is if you don't get another upwave and instead you get a dominant down wave like this, then once this wave down is dominant, which happens right here, right? So this right here. What happens next, either on this time frame or the smaller time frame, that gives me the signal to get in a trade? Is it either an opportunity to trap some shorts at the low, or is it an opportunity for continuation? I'm not sure. But those conditions are somewhat unusual. And so if there's a pattern there, I want to exploit that. And my guess would be, if the next wave is dominant down, my guess would be retracements with aggressive signals to the downside would probably be shortable. But I don't know how often this might come back up, take out the liquidity, and then roll over. It may be often. It may be often that it sets up like that, because when you have a low volume at the high, they like to repair that before leaving the area. So I have to, like, there's two trade ideas there. There's the immediate aggressive one to see if maybe some of these signals here are consistent with that happening on the smaller time frame. That'd be great. But bigger picture, I wonder what the better trade is. Is it waiting for them to come all the way back and retracing this low volume high and then selling it, or is the better trade getting an occasional signal here, maybe on the smaller time frame? See, because on the smaller time frame, if I remember correctly, I didn't unhide it. On the smaller time frame, we had the this red and yellow combo, as well as black and yellow, is pretty strong. So if it's in a trend, and so if it identifies a trend, then that's a pretty good short.
And then the other way is it's white and blue. So it's a white diamond with a blue box going the other direction. But like I said, it needs to be a trend, but that might be enough to tell me on this tiny little time frame, we have what basically starts a trend. We have trapped buyers at the highs. So on this little time frame, once you get the dominant wave that fails, you have trapped buyers at the highs. You might have missed this, but if you get a sign of trend continuation like this, it might be worth taking. It might be that easy. And it just didn't show up on this time frame, unfortunately. And it wasn't dominant yet on this time frame either, because this wave was so big before it. So I mean, but just because it didn't set up here doesn't mean it won't set up always, right? Or usually, I should say. It obviously won't set up always. But it wouldn't be hard to go back and look and say like, well, where else did that happen? And then look, you also had divergence on the MACD histogram, which is, I have as a line chart, but that divergence there, when you have the divergence in volume, might be even more strong when you had that strange phenomenon where you've got a dominant wave on the small time frame, but not on the bigger time frame. That might be when divergence really matters. And then if you just want to wait for the signal on the higher time frame for confirmation, you might be able to get an aggressive sell. That actually might work. That'd be cool if it did. We'll look, because it's like I said, with the algo already having all this stuff calculated on here and having all this like visual representation of information from the footprint, it makes testing those theories pretty easy. Then it's just a question of forward testing them to see if they still work, but it's not hard to go back and see if that's how things happen in the past. I wonder if ES did a similar thing. Might have, because they got the exact same signal here on the 6 tick. I wonder what they did on the 4 tick. I think this is 4. I want 4. Let's just see. What did this look like? Did they have a dominant wave here and not a dominant wave here at the high? So here's the high, right? Wait. Oh, they didn't make it to the high. Oh yeah, they did, right here. This was a dominant wave. So at least 3 waves in the down wave, at least 3 bars in the down wave, got bigger than that on the up wave. What about the 6 tick? Not dominant. There's the high. Weak. Right? Weak wave. Same exact signal. X. Right at background. Divergence. It's exactly the same. Okay, cool. So it might work on ES too. That'd be cool. It's set up the exact same way with the X. Let's see. What I don't know is what that means for the retrace. I have no idea. Oh, there's a blue X. That's interesting. What happened here? What did I do? Hold on. I messed something up. There we go. All right. So now buy program is on. They've got evidence of the buy program being on with a higher low on the volume oscillator. So they're going to supposedly, and I mean, they did have big volume to the down. That's probably what triggered it, is big volume to the downside getting wrecked. So they're going to try to squeeze this, is what that suggests. Interesting. So they bounced off that, and then we got the X. But this is the area that I thought sellers would show up, so I'm not going to buy it. Because I don't think the bigger picture is bullish. And we don't have a dominant wave here. And we don't have a dominant wave here because these waves are too small. We need 3 bars to be a real wave. So buy program's on, though, which means that if we get a trap here, it's probably a buy. So if they trade under and then aggressively try to save this, like with a star, it's probably worth a scalp. We'll see. Like this. X, trade under it, come back aggressively. Usually that goes higher. And then also, like, bigger picture, come back at it aggressively, usually gets a scalp. It's not always a trend reversal, but it's like the algos that respond to that volume shift, they don't like being wrong. And so they'll set up an opportunity basically to make sure that they can get out break even. So that's the way I look at it. And again, you don't have to necessarily buy right when they buy, but not fighting them is probably a good idea. And so now all of the aggression is right here in that little zone right there. That's where there's some big buyer that says, I don't wanna be wrong, so I'm defending this level right there. That's where he is. So what I would expect is if they trade down here, they should try to save it. Should. Because it's a high volume zone. In other words, it's an area that's important. I don't have to trade on that information right away, right? I can wait. I can kind of cheat and wait and see if they win. And if they do, the pullbacks into that zone can be bought. I don't have to just like this. I don't have to sell here to make money. I can just say, hey, they cared about this. Someone put a lot of energy right here. And so if they come back to here and they reject it, it's probably a good short. That's the easiest way to think about it. You don't have to be an aggressive. There's an aggressive way to do it too, but you don't have to be super aggressive. Just see where we are level wise. Yeah, so there's a a low volume node above us on the footprint. On the profile. Too many damn tools. And there's all sorts of resistance up here. I mean, we basically came up, tagged it, and rejected. So what would not surprise me one bit, as I've said a few times, is to take the liquidity up here, go to like 11,275 and reject. That would make perfect sense. It doesn't have to do that, but wouldn't surprise me one bit if that's what we got. Have we gotten a dominant wave on the downside, on the upside yet in the smaller time frame? No. What about on ES? ES. No. They have a dominant down wave. Oh, that's interesting. ES has a dominant down wave. Okay. Did they have a dominant down wave at the low? Because that'd be a problem for shorts. Nope. So their dominant down wave is here, not at the low. That's bearish. Well, more bearish than bullish. Have they gotten a red X? No. So there's no indication that there's a sell program on the tiny, tiny time frame of ES, yet somebody tried really hard up here to sell this. Interesting. Are they just going to get trapped then? Because on NQ, it looks like it's a buy program. They're going to fight over this. I don't know. We might not go anywhere. They're just, these two are just facing each other. This whole zone could just be chopped from here to here. It may be smart just to not trade that at all, because they're going to fight over it. And in fact, there was one back here too. So you could even stretch this further and say, I don't want to be a trader in here, and instead I'll just wait and see if they defend this, I can buy it. If they reject this, I can sell it. And if they get over it and then they come back and they bounce, I can buy it. If they get under it, come back and reject, I can sell it. Right? Just let them duke it out in the difficult zone. And then rather than having to take every single scalp, just wait to figure out who wins this battle. Let's check. What about the higher time frame? No X's anywhere. That's interesting. But they did get the arrow. These arrows don't show up very much in the higher time frame. They did get the arrow, and that created a drop of like 100 points. But see how you don't get them very often? So where was the last X? Oh, wow, it was way at the highs. And see, they never made it back there. Oh, and there was an X here. See how they get under it and they come back aggressively and save it? And so they look like they want to get up here. The bigger time frame looks bullish. They tried to sell under this and they couldn't. See that big volume right there, the green? They got through that big volume and just immediately saved it. There's not another one of those till down here at like 11,000 is the next one. So if you don't think we can get to 11,000, you probably just want to be bullish on the higher time frame. And I don't see any problem with that. But see how they got overbought here on the volume zone oscillator, right? This is what we were talking about before. And then once they break down below the zero line, which I realize is not until here, right? So you couldn't get the very top. But once you see this, and especially like purple bars now underneath that, like that's potentially just buyers just giving up on that whole thing. And then if you get on the volume zone oscillator, if you get a move that goes from overbought all the way down to oversold, like I said, I hate those terms, but that's what they call them. Because it's not even price, it's volume, you know. But that's just that's the names of the thing. So when you get that move, usually whatever you were doing before, whatever state the market was in, it changes. So if it was majorly bullish before that, like it was like straight up like this, once you get this drop, it's gonna calm down or reverse completely. And so now today we got just consolidation after that, because yes, people got trapped up there, but the sellers were so aggressive and they've been so trapped before that we just get a standoff in here. And it just kind of traps people on both sides. So again, the easier way to trade this is figure out where the buy program started, which was about here, and then where the sell program started, which was about here, the little X's, the red X and the blue X on my screens. And then just don't be a trader in there. If you want to trade on this time frame, I realize that's a huge zone. But if you're trading a big picture, you just don't buy until it's underneath this. And now you can buy it, right? So like under 11,130, you can be a buyer. But you don't really want to be a seller until it gets up to like 11,380, 11,375. And then you can start looking for sells. But this whole area in here is going to be choppy. And so you at least don't want to be using momentum trading strategies in there. Right? And that exact same concept on the smaller time frame would keep you safe from all of this junk. Right? And you would know, I only want to be long if they can tuck underneath this and save it, tuck underneath it and save it. And I only want to be a short if they can get above this and reject it. Oh, now we can see, yeah, and we got another X in here. So they're fighting over this big time. And there's another red X, see? So this is probably just going to chop. They're trying to like solidify this as a battlefield. So now what you could do, you could basically pull this down and say, my zones now that I don't want to trade for sure on this time frame is like this tiny little area here. Like here to here, it's like that's where all of the decisions are being made. So wait until they either break out of there or under it, and then get the retest and see if they reject on the retest. You're gonna be way better off than trying to make a decision in this area. So here, I'll spread this out and make more sense. Here to here. This should all be like ignored in here until they move out of it. Unless you know which direction you want to go. If you've got a very clear direction, then you can just trap one of them and it's over. But if it's like chop, 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 and you're seeing buy programs and sell programs both clearly being activated, you don't know which one's going to win until they do, and then once you know who's winning, then you join that side, right? You don't want to join a fight until you know if you have a choice of which side to be on. You don't want to join the fight until you know which side is winning. And that's the great thing about trading as a retail trader is we can actually choose not to trade it. We can be like, hey, I'm not touching this until X happens. So I would just avoid this area completely. You don't have to sell right when it goes over it, right? But wait until they do it and then see what happens. And if they bounce, then be a buyer up here. If they fall back into it, you could sell it. But you wanna see one of these sides you wanna see one of these guys, one of these X's get trapped, more or less. We want to see one of them get trapped. We can have hints based on volume on the smaller time frame. It looks like buyers are getting some momentum, right? But you can clearly see on the volume zone oscillator that it's all neutral. It's been momentous, but price and volume is not really picking up. It's not going anywhere. And look, they made a higher high, but a lower high on the indicator. So that suggests that it's not all that the momentum is not all that strong. And they're rejecting the zero line here. Well, not yet. They have to, if they close this bearish, they've then rejected the zero line. And so I would then expect them to come back and test support. Where is support? Right here. So they'd go down here next. And that makes sense because they ran into this big seller who was stacked on top of this big seller. But the hard part is you've got this buy stacked on this buy too, right? So it's just so much information that like you can't make sense of it because there's just too much going on here. And so you need to wait and be like, I don't have a clear direction. I don't have a clear sign of one side being totally in control of the other. So I'm just going to wait and see. Because see, like, look, there's a sell program identified here, right? Right there, that X. And then it was an aggressive seller and all that. But if you just sell that immediately, you're only going to get like 4 points and then it's going to take you out, right? Because you want to be able to put your stop like 10, 15 points behind it. So instead, identify that there's a sell program there and be like, okay, if we can beat this and then come back in and hold it, maybe I'll be a buyer. So if anything, this would be a buy because we got over it, we came back, and we're trying to bounce. So if that's the way you see it, and the bigger picture is bullish, you could be a buyer on this aggressive bar. If you have to be a seller, what you need to basically see is them rejecting here, and then coming back in and bouncing off it to the downside. But based on volume, I'd say buyers have a little bit of a advantage here. But structurally, this area is going to probably be full of sellers. So they might spike it, but it'll probably roll over. It's a long-winded way of saying that the market's not going anywhere right now. It's just people fighting really hard over a very tight area. And most of us should probably not be trading that. Because it's going to you're going to have signals that say, hey, if you want to be long, you should get long here. But those signals don't identify the fact that we're at a location where everybody's still fighting over, like tripping over themselves, trying to go back and forth. It's like a real busy fight. You want to come in and clean up at the end. That's where we want to be, right? We don't want to be in the pit when like you don't want to so let's say that you're in the what's it called, the battle royale, right, where everyone's just goes into the ring, just like starts hitting people, and if you get thrown out of the ring, you're out. If you had a choice of participating when there was 100 participants versus when there were 2, wouldn't you rather wait until like 98% of those guys got taken out? If the reward is the same, and you don't even have to be part of the game until most of them are gone, wouldn't it make sense just to wait, right? So in this case, we can do that. We have the right to wait to see who's actually winning this battle. We don't have to make a decision right when we see some, like the X's are basically like, with that same analogy, the X's are basically just like some big, like some guy coming in with big muscles, right? Like he hasn't even hit anybody, but you all of a sudden see like, oh, I've got someone really strong on my side, right? We don't know whether or not they actually win, or whether or not they actually have any effect until you see how the market responds to them showing up, right? But if you see the X and the market responds by lifting and like getting away from him, and then his low or near his low becomes support. So if now that we've lifted, if it comes down here and it finds buyers down there, that's way stronger than of a signal, and a way more consistent of a signal than just buying the X. So like if we came down and we saw one of these bars with the white and the blue, which is a pretty aggressive signal, but before it we have gotten an X and they tried to break it and then lifted with that signal, it's very strong. I can show you plenty of situations where that happens. But look what happens if you try to take the white blue combo bar when there's no blue X over here, right? Because there's a red X here, and so that aggressive move just doesn't work, right? He gets taken out. The last blue X in this case was way back here. Whoops. It was way back here. Right? So you want that aggressive, so that they did break out. It looks like it's bullish. You want your buy to show up here. That's the location that you want it to see. So we would like to see the same thing. Lift off, come back, hold, but test this general area. It can go lower than it, but not a lot. And then aggressively lift. But what's interesting here is that you've also got the same opportunity going the other direction, right? Just like here, X comes down. If we come up and we run into an aggressive seller, the exact inverse of the blue and white combo bar is a red and yellow combo bar. It looks like this, right? Red diamond, yellow box. Those on the same bar, when you're going in the direction that all the momentum is, that all the strength is, you can get immediate moves for scalps. But notice just the red or just the yellow, not enough, right? You need it all, like the sequence needs to be correct. You can't make excuses just because it's like, well, I've seen those red diamonds work before, or I've seen these red X's work like here, so I'm just going to sell every red X. Well, you're going to get blasted because you're not taking it into consideration the environment, right? It's like showing up to a fight and like not knowing whether or not it's a gunfight or a knife fight. Like, don't just show up to a fight with any weapon that you know works in the past, because you have no idea what your opponents are bringing to the fight. So, even if you show up with a 9mm and you realize that everyone on the other side has AR-15s, like, yeah, that 9mm might have done you real good in the past, but all of a sudden you're screwed, So you need a way to identify what kind of a fight you're in. And when you see this kind of action, where it's like chop, 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 dig, chop, 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 rip, chop, like that kind of action is dangerous, right? You need a really strong weapon to survive that environment. And that weapon can be something that works maybe when you get a retracement back into it, but not just aggressively buying it. That would be a good example of that. Okay, so we did take that high, and that makes sense, right? Now let's see if they reject it, because if they do, which that would also be expected. Note here they got a big dominant wave up at the high, big dominant wave up at the high. So that problem back here that we had, where the dominant wave at the high on the 15 tick didn't translate to a volume dominant wave on the 24 tick, that problem has been fixed. And then you could measure where all the volume was if this is going to be the high, and the volume is way down here. So for shorts to take this as expected, like we knew the volume was down there because the X's, but you would need to get it all the way down here, and then you need to come back up and hold that general area and reject. That's what you would need it to do to go short. That's what I would need to do. To go long, we just need to see this area hold and bounce. So once you've broken out here, even though there was a swing high that you might be trapping back into, there's not great evidence for why this should be sold immediately when this area just got, all the people who sold on this diamond and this X just got trapped. So you don't really want to be a seller where they got trapped so short. You want to be a buyer above where they got trapped short. Right? So if you are going to sell, make sure you're out before you get here. And that's not very good risk reward. Not to mention you're trading against momentum. But if this is a star down, the setup is right. It's just the environment is wrong, right? That's where it gets confusing. So upwave dominant. Now all of a sudden I can take more setups now, right? Back here I had like 0 setups I could take. Once we've broken out, now I have like 15 I can take. Like all sorts of combinations could get me in a trade. And the direction is more clear. But what actually shows up here now to trigger me in, the options expand significantly. Like it could be the blue and yellow combo bar, this one, or blue and white combo bar. It could be a star down here. It could be a green bar. It could be a diamond by itself. It could be another blue X. Like there's all sorts of combinations now that can get me long, but all of them involve dipping first. And that's important to identify. Almost got the head and shoulders, but it didn't set up. So getting a pullback right here that then gets bought would be an ideal spot. Note we've also fixed the divergence. That's all been repaired. So if they want to rush it, they can. We're now coming up to that voodoo range level. See that? The dashed line on my charts. And the low volume node. So, and then there's a lot, there's single prints up here, and then a lot of volume up here. So the volume area of this drawn volume profile is this, right? So our expectation should be if you can't get through this level, the chances that you're going to get back up here are pretty low. But if you can close in here, you should easily be able to test the high. Right? At least the VPOC, if not the high. So 11.315 becomes very important for bulls to close above. If they can't do it, you could get a rejection there. But note we have now cleared out all the liquidity from this earlier high. So if... Oh, and they closed it right at the high. So now if shorts want to fight this, and if they're not severely trapped, this is where they would fight. All right, so that's the close. We're finally trying to rip through this low volume node that's been problematic. If you look at the 80 tick, this low volume node has been a problem for a long time. So see this right here? Those are low, that orange color with the red on the outside. Those are low volume nodes. It not only rejected here, but if we go, I don't know how many days I've got loaded, but if we go back, well, I guess it was this low volume node, and we're here. So, but if I remember correctly, I didn't load enough days. Earlier, it was also problematic. When was that? Maybe not. I'm looking at my candle chart on another screen. I guess not. I guess I was thinking this. So that one we've already. Did we thoroughly repair 1120? 11200? Let's see. Reject. Oh wait, not 11200. 11200. This. Did we repair this? We did. Put lots of volume in there. Okay, and then, whoops, did I not fix this? Hold on a sec. I don't think I fixed this. Let me fix this before we do a review. NQ profile. Okay, so this should have been... Here, I gotta fix this. I didn't do this right. Okay, so on the profile, we can do it right now together because I forgot. Simon did it for the group and I forgot to fix it on my chart because we opened nowhere near it, so I didn't even bother. But yesterday's volume point of control was way up here at 11,357, right? Up in that the place I just drew earlier, and then it was up here, right? Which is what I was showing you before. But on the profile, the way it looks is like this. But then see how you've got this, and that's where the TPO point of control is too. So that would be a regular target, like a very natural target. But look how this one was very prominent, right? So that one needs to Fridays needs to also be. We want to be aware that it's there, so we're going to move this old prominent point of control to here and then lock it up. Then we didn't know about today yet, right? Because we're going to do a review of what we already knew about. But notice these were single prints into that low volume node. So this low volume node needed to be repaired anyway. And then they put single prints in it on Friday. So it would make sense to come back and fix that on, I'm sorry, I'm saying this wrong. On Monday, we put in single prints. And so today it makes sense to go down and fix that. And then see this low volume node here? That one would also be support resistance. So this is also a sensible place to look for longs, which I did not put on my chart, but we had it on Simon's chart. And then, so we would not have known about today yet. We would only know about yesterday. There's another, there's two anomalies. There's one up here. See that funny little chunk there? But it has more volume than the areas around it. See that? It's like a little chunk out of the TPO. That's an anomaly that you want to watch for at least one reaction. And then there's also one here underneath volume area low. See that big dip here where it's like really thin? Right, but it did that because we had a second distribution and then like the start of a third distribution. It was a very unusual shape where it was like a P profile with like the start of a W distribution. So what you usually see is double distribution, meaning one distribution up here and then second distribution down here, or like even here and then a big P distribution up at the high, but the low being more even. So the fact that we didn't get that means that this area needed to get repaired, right? And the fact that that was right underneath this low volume node from the past made that low volume node resistance, right? We closed above it, but it would make sense that we would come down here, repair this, maybe come down, repair the single prints and this low volume node. And then if we found support at this prominent point of control, you would expect them to come back through, and this area should then be relatively easy to travel through, right? So and then, like I said, up here we have more interesting stuff, but we didn't get there, so I won't even bother. So that's what we had on the profile. If you were just looking at the like trade locations, those would be the ones you'd want to be watching for. Okay, so I'm gonna pause. I'm gonna stop the video and then I'm gonna start it again, and we're gonna that way I can jump right to it in the future and it's not stuck on top of this longer one. But now that I've got a couple ideas for things to look for, first the dominant volume on the small time frame that doesn't match the volume dominance on the higher time frame, and then also the X's with the arrows, right? And how often that works as a reversal signal and what you need to see for that to happen, and whether or not those two may be related. And then I'm also curious about what happens when you get X's right next to each other like this, and whether or not that makes pullbacks into that area more likely to be viable. And then finally, I want to review highs and lows of previous days on ES and see if I can't get this background, which is copied and overlaid from a different chart. I want to see if I can get a trade set up working with those colored backgrounds. I don't know if I will, but if I have time, I will investigate that a little further and see if there may be an opportunity there. Like I said, I don't know if there is or not, but an example would be once you see the green one after a big move down, that you would look for a test below it and then break above it, right? Which would be test below it, break above it would be here, and that you would then know if you can get volume up there and develop volume up there, that perhaps X's or some other signal may give me an opportunity to get in. And I don't know what the answer to that is because I don't know what the settings should be on that setup, and so I want to play with those settings a little bit and see if I can avoid, like, these are fine because that's going in the direction I want to go, but I want to avoid the situations where they go green brown green brown green brown or green and then immediately break down, unless there's some sort of different setup. Like an idea would be if I got a green bar where I know it's not support, could it be possible that stars that share that range may be sellable, right? So let's see. So here it looks like potential support. So I wouldn't really think there, but it would be. Let's see if I can find another one. I don't know how far they go back. I tried to thin it out so I don't get as many by adjusting the settings, but I may need to adjust the settings again. Here, let me go to the end and we'll quickly do that. Okay, so the most recent one was here. Is this a potential high? It is, so we're not going to worry about that. That setup would more be, does this get taken back and then trade back in with an X or a star? Yes. But let's see. Okay, here's one. We know this is not resistance, right? This is not the high. It's coming in at a low or at like a range. So what I want to know is if I get over this and then come back with a star up, could it possibly be a buy? And then if I go up and then I reject it with an X, which already happened, could it be a sell? Let's see. I don't get above it. Okay, there. Trap back into it, come back with a star. Does that work? It does. Cool. Okay. All right, here's one. Could this be the high? It could be, right? Like, we don't really know. It could be a reversal point, but it doesn't look like it. It's got a blue arrow on it. It looks like it's momentum up. So I'm guessing that I'd be looking for a star up in that range. Let's just see if I get it. I get a green bar up in that range. And then there, I get an X in the range. Does that work? It does not. So if you wait too long and it actually goes higher, then it looks like more like a trap back in and you want the stars down, maybe. Okay, not sure about that. Let's try a couple more. All right, so here's some that like come one after the next, and this is what I've been trying to avoid. So here, could this be support? It doesn't really look like support to me. It looks like maybe we'd be looking for resistance. So I think we'd be looking for stars down in the same range. it could be a trap back in. So star down in the same range immediately, and that works. Is this one potentially support? Well, it doesn't really look like it, right? Support should be down here. So I'd think, again, stars down in the same range should work. So that star down, same range. That one traps back in, then star down in the same range of this one, and that one gets dropped back in and works. But notice first we got this lift here. So it's not perfect. The orange bar worked too. And if you go further than that, does it become a new low or a new high? It becomes a rejected star. Okay, cool. All right. Here, could this be, does this look like the high? It could be, right? But it's bullish. So let's see, does it drop back in? No. Do you get a green bar or a star? You get a green bar going the opposite direction. When we come back to that area, does it save it? It does. With a star and an X. Oh, that fails. And then you get an X on top of it, which works. Okay. And then this one doesn't really look like the high. You've got a lot of bullish indicators here. So let's see if I can, but it's signaling me low. So let's see if we can get a star up. Well, it is a star up. Does that just immediately work? No. We get an X in the same range. Does that work? Yep. But be careful, because we also got stars and X's to the wave down, and that one worked, but the next one didn't. So right now it looks like it's maybe like 50% to do it that way. Okay, could this be the high? It definitely does not look like the high, right? So let's see if we can get a star up or green bar up or an X up that gets us long. Nothing. See, this would normally be a short, but it doesn't look like a high. Right there, X up. Does it work? It does. Okay. Does this look like the low? It does. So a star up or an X up should be good. Green bar up, that might be good. Nope, that one. Oh, I'm sorry, a trap back in. So it's got to get under it and then come back. So that would be an aggressive one. This would be the more traditional one. And it does work with this one being a higher low. X confirms if you want to wait, and you'd go. Okay, is this the high? No, right? So we're probably looking for continuation, which would be star in the same direction, or star in the opposite direction to give us a low. It rejects. It's got to come back to here. So star in the same direction for continuation. Does that work? Barely. Yeah, so that one did not work out very well. Oh, but interestingly, this zone became support later with the green bar. That worked. Okay. Most of these are not at the highs and lows, so they're not working the way I thought they would. But it might still be valuable. So here, does this look like a swing high? No. So it's probably not a reversal, but it could be continuation if we get a star down in the same range, or if we trap back in. Otherwise, we're looking for, that's probably what we need to do. So there's a diamond in the same range. Does that work? It does. If this is the low, we would expect that star to be a little higher. Yeah, there's the star in the same range for continuation. That seems to work pretty often. Yep. Now, is it an important area once we take it back? If we can get above this, we get above it for one bar and they reject. What happens when we take it back? Oh, they reject here too. Try to reject there. Or do we don't get there? There. What happens when we take it back? Okay, see, they try to do it with an orange bar. They come back with an arrow. Now, do blue arrows start to work? Blue arrow. And it tries. X. Fails. X under it with blue arrow. There we go. So that might work when it's the opposite direction. So this is similar. It's like it's clearly not the high, right? Or sorry, it's clearly not the low. So if I mark this, and if we do go higher than it, but we reject it, do yellow arrows start to work on the downside? We just reject it with orange. That's fine. Yellow arrows do work, but we're really far away from it. We want the yellow arrows to be up here. Okay, yellow box, no. Yellow arrow, does that work? Not really. Okay, got above it, now we have to reject it. Do yellow arrows start to work now? Do we get any? Yellow arrow way at the low, it's way too far away. Oh, it still works. Okay, comes back up, do they reject? Yes. They try. They try, no yellow arrows. There's one. There's one. There's one. And they work. So, okay, so I'll come back to this. That might be the easiest way to use it. That might be better than the immediate is just mark. See, like, but it's probably different when it's in the right place. Like, this does look like the high. So my guess is right away you could probably take trap back into this. Or yellow arrows might work right away. Yeah. Because that's momentum. Yellow arrow, right away. Yeah. Okay, can we take a trap back in? Does this work right here? Yeah. Scalp. Yellow arrow above it. Might not work. Now, see, you get above it, and now it's bullish. Right? So if you got back in here and you saw a sign of aggression, you'd think they would bounce it. Okay, so here's another one. Let's do it the other way. This looks like the high. So I would think aggressive signals to the downside, trap back in, yellow arrows. Momentum trade should work now. X to the downside. After trapping back in, that should be really strong. Yellow arrow in the area, that should work. Oh, it doesn't. Interesting. So it's obviously not 100%. Get above it. Now do blue arrows work? Or what do they do? Oh, I don't know. So it may specifically be when they aren't positioned in the right place. Which does kind of make sense. So like this one. Let's find a blue one at a high. Oh, that's where this one came from. Okay, blue one at the low. This one had a brown one too, but blue one at the low. Let's try this. Okay. So it looks like it could be the low, right? So we want to wait for an aggressive signal, get under it, bounce back over it, get over it, come back and bounce off of it with maybe a blue arrow, something like that. Get under it, blue arrow after getting under it. Does that work? It traps back in, and then the next aggressive sign. Does the next blue arrow work? That would make sense. X works. So blue arrow followed by an X at the same location gives us the lift off. Now, do pullbacks into that area get bought? Later. Oh, do they not make it back there? I don't. Here it is. They try, they don't make it. They don't make it back there. Okay. So it does seem like it works better when they're in the opposite direction. Because that one, it just kind of becomes support. But really, the bounce was here. I think this one, because it's going the opposite direction, so this looks like it's potentially a low, but it's a bearish signal. So what I'm thinking about, the way I'm thinking about it is it may be a potentially trapped seller if we can get above this. So for now, we should think stars down, yellow boxes down, X's down, arrows down, probably work for continuation, but eventually those are going to fail. Okay, we get right there. So that one probably fails. It's not inside of the box, whereas this one is. That one failed. There, star down in the box, that should work. Right? It doesn't work for much. We get over it. So this is probably going to fail because it's now above it and this guy's trapped. So now does arrow followed by a strong buy signal give us an immediate lift? No. So that's not good enough. Okay, so it got above it. Does the pullback on an aggressive bar work? Yes. So you need to break over it, pull back, not just bounce right off of it, but pull back in and maybe get back into the range or check below the range. But now that you've gotten above it again, do the arrows stop working to the downside? I would think they do. Yeah, see, these arrows are not going to be tricky. But look, the blue arrows don't necessarily work either if you're not in the area. Now we've gotten another one here. But let's just see, does it ever come back? Does that end up being support? Doesn't make it. Right here. Yeah, blue arrows off of it. Blue arrows off of it. Wow, again, you have to go under it. So it's definitely not like a brick wall or anything. Let me just see, what is it that it's bouncing off of in that case? If it's not that, if it's not this, it's somewhere in between here, right? So are there any X's in the area? This one. Hold on. Could it be this? Is that what sport is? Because see, there's a buy program that got stopped, and then they put another buy program back in, and it reclaimed this. That one. Does that low hold? Yep. Volume shifts, which are green, coming out of that area. Clear support. Okay, so let's try that somewhere else. So we need a green at a high or a brown at a low. That's a brown at a high. And then we're going to look and see if X is around it. Okay, that's at a high. That's at a high. That's at a high. Let's try this one. So are there any X's in the area? Because this does not look like the low. Right? That does not look like a low. Here. So do we get... Well, first of all, we get rejection out of it. That doesn't surprise me. There's an X underneath it. Does it come back and produce an X? Comes back and produces a star. There. These. So we can just take the whole thing since they're right next to each other. Let's do this to this. Does that become an important pivot in the future? There's a third one. Right, so all of these X's, once we break a... I'm not totally sure what to do with them right away. That's probably going to depend on volume. Right, but I see here they're trying to go lower and they're not getting much volume compared to the previous big wave. So this one has more relevance, I think. But you might be able to see that on a smaller time frame. Let me see. See, it looks like a pretty big volume wave coming down. But look how the 5 tick. I bet. I imagine that one might not be so strong. Yeah, see, so it is dominant compared to the other up wave. But if you look to the left, it's the bigger strong wave was this one, this up wave here. We're trying to get under it, and they're trying to save it, right? So, is the biggest? Okay, this one is dominant to the low, right? Is that the low? Is this the low of the? Is the big dominant wave into the low? Yes. And is this wave not as dominant as the one before it? Yeah, pretty sure. Is the green one bigger? It is, right? So it puts in a big wave on the small time frame, but it can't dominate on the higher time frame. And the bounce happens with an X and an arrow. I've seen that work before. Now, does this area, if you didn't catch this trade, does this area become an important pivot? Or what happens, in other words, when you get above or below it? Well, above it, it looks like the blue arrows are starting to work off of it. Yellow arrows into it. X gets beat. That's interesting. So the X that comes on the higher low gets beat. It gets 10 points, but then it gets beat. So what happens when you get under it? Does it act as resistance? Do yellow arrows start to work? Okay, this arrow is way too low. This one works. Do blue arrows more or less fail? Yes. Okay, we come back into it. A red X fails. That's the second X that's failed in the area. Does this become like a chop zone maybe? Another X. This one seems to work, but it's got an arrow. Maybe they're just better with arrows. Okay, get under it. So we tried to get over it, but we only got over it with a pink bar. Not very strong. This first one doesn't seem to work, but this one does with the arrow. Once you get under it, the first yellow arrow doesn't work, but I bet if you get an aggressive signal in here, once you've gotten under it, it might work. Right there. It touches it, comes down with the arrow X. Nope. That fails. And then arrow X gets you back in there. There. Arrow star. Does that work? It just becomes a chop zone. Yeah, it just becomes a chop zone. Look at that. Okay, so what finally gets you out of here? See how every time you get out, it comes right back to it? It's like acting like a magnet. What finally gets you out of here? A higher low. That might be it. A higher low. Nope, comes back. Yeah, higher lows that don't touch it. If it's even out of it yet. It just becomes a really big chop zone. Did that not happen on the downside? Did we not have a lower high that was outside of it? Yeah, we didn't. Okay. Well, we'll do one more. And then we'll pause and come back for some more back testing and analysis. Okay, we did that one, I think. Okay. Clearly not the high, right? But there's so many of them, I don't know which one to do. This one's got an X and an arrow. Let's try that. Okay, clearly not the high, but in a downtrend. I would think that stars down and arrows down that touch the area should work for now. They do. When we come back to it, assuming we do, does it reject? Rejects with a diamond, rejects with a star. Okay, that works how it would I would expect it to. Rejects here. It's not this one. I don't want to get confused. Rejects with a star. Definitely seems to work better when it's got an X and an arrow. All three of those signals. Okay, gets above it, right? Arrow down gets you below. There's an X below it. Does it reclaim it? No, that's the one that fails. Interesting. So you got below it, got above it, got below it, and then just rejected. Does it come back? Yeah, and yellow arrows are working below it. Until here. X. Getting over it. Yeah, that's hard. Now, were there other X's in the zone? Because that's the other thing I found with the other one is the more X's you had, the harder it is. So, there's this one. Is there a red X anywhere in that zone? No. Not till way down here. Okay. Alright. Yeah, I think they really need to get trapped relatively quickly. Like this. This guy gets trapped almost immediately. I think we did that one, actually. Are there more? Or is that the last one? Might be it. That might be it. So I may need to adjust the settings on that to give me a few more signals, but not totally sure what to do about it yet. I think the easiest way is if it potentially could be a cell, it's a trap back in with a signal. And other than that, mark the area. See if you can get rejections out of it after leaving the area. But you can see that it's obviously not 100%. Oh, I know what I said I was going to do. I was going to look and see when that doesn't work. Do you have a volume problem? So like here, is the down volume just not strong enough? No, the down volume was dominant, and we couldn't get anywhere. What about here? Up volume was dominant. Up volume was dominant. Interesting. So here, the time frame, it's exactly the opposite. You got weak down volume at the low, and all the up volume being the strong one. And then once this gets beat, here, this guy, once that gets beat, that's like basically it's a divergent volume wave. That's the base of the divergent volume wave. That becomes support? Yeah, that becomes support. Okay. I mean, that makes sense. But the interesting thing is that on the higher time frame, it was a dominant wave. And so, with this being the dominant wave, that apex is way up here. Way up here. And so my first thought would be, I would think that this or this could be continuation. But it actually reverses. Despite the fact that we have this divergence signal here, it's very short-lived. And what was going on to the left here? Was there anything else to the left here? Just this one. I don't think that's in the right spot. Is it? Nope. So how do you interpret this differently? Oh, did we have divergence at the high? We did. Divergence at the high, biggest wave to the downside being from the high on the bigger time frame, and then the smaller time frame, yeah, dominant wave off the high. See that? That's the dominant wave, and there's divergence. So dominant wave off the high. You don't want to buy it right away, but if they can put in a divergent wave on the smaller time frame, you may want to start looking for traps like that. Arrow star, or get over this arrow and then pull back, and then what lifted it? Purple bar, green bar. So is that a DVP? Hold on, this I might see it now. I didn't see this earlier. Divergent wave, get over that volume. Is this one nearby? Yep. So get over that, this volume build, which happens here. Now this big seller, this big spike, these guys are trapped. So any signal in here from any signal between this volume and like wherever, like this volume is here, there's a low volume, so it's like this line right here. That's the zone you want to look for. So you could get caught here on accident, but you just have to take it again. So it's a DVP after divergence at the high, and yeah, that's tricky. And it sets up on the smaller time frame. That's what's so hard about it. Okay, what does it look like on the higher time frame? Big dominant wave down. Yeah, with volume in the middle. And this, so these are separated. You wouldn't. That's a totally different situation on the higher time frame. But you get the diamond with the blue bar on a pink bar, which is pretty strong, right on the VPOC. And that lifts you. So does this. But no X anywhere. And this did get oversold and didn't get over the zero line. What does that look like on the 5 tick? Yeah, it gets underneath, oversold. Does it get back to the 0 line before the entry? Right there. Yes, it does. But then it goes back into oversold. Wow. That's what I am used to seeing. Is these little bounces inside of the neutral zone. So that's this one. So this is probably the easier entry. But on the bigger time frame, that's this one. Or maybe this one. And by that point, you still have not gotten to the 0 line. Very hard to take that. So on the opposite happened on NQ. I said I would switch, but I've just ended up doing it now. The opposite ended up having an NQ where you had dominant. Oh no, it wasn't this far. You had dominant down into the low on the small time frame, but on the bigger time frame you had a divergent low. So on the one with the divergent low, was there a DVP set up? Oh, it just ripped. Huh. I don't know what to do about that. Let's just see. Where's the yeah, they're totally separated. On the bigger one. Okay, on the smaller one, is there a setup? This is the one with the stronger wave. No, they're totally separate. And do you even come back to it? It just rips. Okay, so that's not going to help. That one was not catchable from my techniques. So, but didn't it happen again? There was another one that did that similar thing where it had dominant wave down into the low. Where was that? But then in the higher time frame, it was not dominant. Right here? Nope. Nope. Right here? Is this not dominant? Aha! So it's this one. So dominant wave down, clearly, but on the bigger time frame, not dominant wave down. Right? So this one is divergent. I guess it's not technically divergent. It's technically not divergent because this is the last wave. And this one, it's very close to divergent. So let's see, what is this set up volume-wise? At the high again, that's not what you'd expect. This, then it comes back to the high. Oh, but they're together, so can you get volume below those? Oh, already did. And no real setup here. What about on this one? So this is the one with the dot where it's dominant. To the bi wave. Wave down. At the high. Wave up. At the low. Yeah, that's usually a no-go for me. Because you need to get over that to confirm it. And then when they pull back, it's this. Okay, did you have dominance here? Yeah. So that's how you do it. So in this case, when it's the smaller time frame, that's the bigger one. And the higher time frame, that's the weaker wave. You can probably go down to the smaller time frame once that's confirmed, and you can start looking for a dominant wave. So you probably wouldn't take this because you didn't have a dominant wave yet. But then there's a dominant wave on the higher time frame. And so that's more important. So now I want to start looking for longs and not shorts. Then you get a dominant wave on the smaller time frame. Now this would be tricky because I'd want to take that. But that doesn't work. and this one does. So you really want it to be somewhat of a, it's like a supernova and then a pullback, but no trap on that pullback, just a rip. Whereas on the higher time frame, the volume levels are together and you came back into that VPOC. Tricky. So let's find another one that does that. Let's just cheat. We'll just find another one that's similar. So we're looking for like a high that is weak or a low that is weak on the doesn't have to be of the day. Here, like this. So the low is weak on the higher time frame. Is it dominant? Yes, this is exactly the same. So dominant low on the 15 tick. Weak and divergent low on the 24 tick. Right? So right away it's like, that doesn't make sense. That's got volume at the low. That's great. Oh, and they just take off. Well, that's tricky. So what do they do here? Dominant wave down. Volume way low. Get volume above it. Any pullback can be bought. We want to be buying down here. Just doesn't happen. We get X diamond, star diamond, blue arrow. Those all work. But that's really aggressive. What could have gotten you here? You got oversold there. Did you have an arrow on here? No. Bounced right off the level. Went right off the low volume node. No arrow until here. And no X until here. And that X needs to get stopped out first. This is by far your best right here. Divergence though. Did you have divergence? Yeah, no, we had no divergence. Well, on the volume zone oscillator you did. Okay. That's definitely what made it go though, is that this one had all this power and it didn't continue. But you really don't know that until like 3 bars later. Like you don't know until here that that's going to happen. They try to fight it. Oh, could that be it? So dominant wave on the down. Dominant wave on the small time frame. Continuation. This would normally be continuation. It gets immediately beat. Does that hold? Okay. Okay, that I can work with that. Let's see if that occurs again. So wait for the attempted continuation to fail. So where's the high? Right here. Do we have a dominant wave? We do. Oh, so we have it. We do not here. No dominant wave. Right? So on the one with the dominant wave, we would wait for this attempted continuation, and if it gets immediately beat, we could take the trade. So here, the volume is at the high. At the high. Okay, so it's probably going to be quick, right? So let's see if they try to buy it again on the smaller time frame. Oh, right there. Does that get immediately rejected? With an X. And that X corresponds with the low of this. X box. This one, it's immediately beat. That's the one, I bet. Oh, wow. So it has to happen fast. That's tough. Okay, what does it look like here? Divergent high, start diamond, strong attempt. Do they try to save it? They do, right here. They try to save it. No dominant down wave yet. They beat it with an X and a diamond. This is it. That's got to be it. Nope. Nope. Wow. They just mess with you. Okay, where is the volume on the way down? At the high. So you've got a DVP setting here, a setup here that it signals there and it triggers when it comes back. So it doesn't quite hit the back. This is your DVP. It's very close. Oh, I see. This is it. So that's part of the problem. Does this one get a DVP setup that works? Because this might just work better on a smaller time frame. So where is the volume on the way down? At the high. So once you get a non-purple bar underneath those, it's signaled. The trigger is a star that touches it, or an orange bar that touches the top channel. I don't think it right there, and that fails. Oh, star, does that star touch it? No. Tricky. What I really want, I guess maybe that time it just didn't set up. Well, let's keep looking. Let's see if that, because that was tough. Okay, this one, is this a dominant wave down? Yes, dominant wave down into the low. Not a dominant wave down into the low. Does the first attempt to sell, oh, let's just see on the smaller time frame, where is the volume? In the middle. Okay, we might get a DVP. Is the first attempt to sell immediately beat? Oh, wow. They just rip it up. Immediately beat. That's so late. And it freaking works. Oh, that's frustrating. You almost need a smaller time frame than 15 tick to get this to actually hook up. Otherwise, you just have to be ready for it, but that's like impossible because you've got a dominant wave down here and you don't know that this is certainly not dominant until you get 3 bars, which is here. And by then, you've retraced most of the move. Well, you definitely know not to be bullish if the smaller time frame has higher dominance than the higher time frame. But it's I'm not totally sure how to get in here. Unless there's like divergence. Let me just see. Is there divergence here? Not really. There's a ton of bid-ask, but it's not necessarily divergent. There might be something else I can look at, but okay, so that one, they obviously don't all set up very well. Okay, that one's dominant. So we need something not dominant at the edge on the higher time frame, like this. Is this dominant here? It is. So we have a big dominant down wave, but it doesn't go anywhere on the higher time frame. You get green here. That's probably your best entry, but really hard to get. VPOC's way up here. That's probably your target. Do they try? Yeah, they go right to it with an arrow. They try to fight it. This is probably your entry. Man, that's hard. Yep. Wow. Okay, so it does work. It's just really nerve-wracking. And I mean, obviously the green arrow, the green bar is good too. So I wonder, is this supernova breakout pullback green bar? Could it be specifically, oh, and then is there divergence? There's hidden divergence. Indicator goes lower, make a higher low on the actual entry. Okay, interesting. All right, so let's see. Dominant. we'll say. Not dominant. So you're here, the bigger wave is here, and this one's got dominance, right? No divergence, maybe a little bit on the smaller time frame. Divergence, though, on the volume zone oscillator. Where's volume? To the low. Way at the high. So probably lifting relatively quickly. There's an X up there. You have divergence at the low, followed by an X. So dot X on a dominant wave down. And look at how deep this is. Volume zone oscillator is really low. And you've also got the momentum shift to the opposite direction. So that you're probably going to have to just buy that. It's here too. Oh, well, if you didn't, volume's way up here. If you didn't, you could measure this. That's going to be the volume. So yes, we got volume above it. Come down, star, and that's it. So that's an example of that blue X lined up with a star. So that may work best when volume zone oscillator is deep, and it probably works best after divergence going the opposite direction. And it probably works best when the very smallest time frame has a ton of volume, but the higher time frame is not dominant volume compared to the other ones. Tricky. So here, your entry is this. They attempt to continue with the triangle or the X, and then they beat it again with a green bar. It definitely works. It's just, how do you know when to take it? Because, like, you don't know it's the low until after it happens. So, like, here, let's do this down. This whole down thing, do we ever get it on this down? Well, let's check. We'll check the high first. So the high right here. No dominant wave, and it's going to take a lot of work to get there. This one definitely dominant, right? So here, do you have the volume at the low? In the middle. Okay, so get under that, and then a pullback can get us short. Is this at the low? Nope. Okay, so cool. So we should wait for the pullback. Oh, we did not get it. We didn't get underneath X. Oh, it's a purple bar. Okay. Yeah, and that's it. Okay, so maybe, does it set up here? Because this is now DVP. And that's the short on the 15 tick. Nope, that stops. Okay, so you can't just use the DVP on the smaller time frame with the dominant bar, and that kind of makes sense. So divergence with volume, high, get under the high, right there. Now reversals should go lower, right there. Star down should go lower. Yeah. Okay, so the DVP definitely works if the volume's in the right place. And that's an easy way to take advantage of that trade. And then the other idea is volume zone oscillator really high? Yes. Is volume really high? Yes, on the smaller time frame. Is volume on the upper time frame not dominant? And is there divergence? And so all of these are true. And so now you can probably be more aggressive selling the X's, primarily when there's an arrow on it. So this one probably is okay too, but this one for sure should work. And if you want to wait for a box with a red. This is your confirmation. It's just interesting that we got the blue one, but the blue one immediately got beat. And that's the telltale sign, is they try to save it and it immediately gets beat. So they try to bounce it. And when that bounce gets beat immediately, it's pretty much over. You just have to put your stop a little higher. Okay. And interestingly, volume zone oscillator is not oversold on the higher time frame, or overbought on the high, well, a little bit, but not much. And so if you wanted to, you could probably watch for this here and then wait for the orange bar after that. Okay, so now let's see if I didn't know where the bottom was. So this is obviously dominant, so I'm not going to mess with that. So we need a low like this. So low is not as dominant as this, but it's also not as dominant as here, so we're fine. So the first dominant low right here. Is this low dominant too? Yes, so we keep going. No up wave. So nothing to do, nothing to do. Right, okay, this has to be dominant. It's not. Right, so it might get a little bounce. This is clearly dominant. Little bounce. Dominant wave on the low. Do we have a non-dominant wave? Right here. Non-dominant wave on that. So here's where we start looking. DVP. Nope, way at the high. That's not going to work. Waiting for the pullback's not going to work. All the volume's at the high. It's got a pink at the high. So instead, you could buy the green bar to be very, very aggressive. Otherwise, since this got oversold, you could wait for it to hit the low and try to buy it there. Nope. You don't get it. Nope. So you really do have to be aggressive there. What about this one? Does this one hit the low, hit the neutral right there? Ooh, it's tough. I don't know if it does. It does. It gets oversold. Oh no, it touches the red. That's not quite right. That's not quite right. So I don't think I would have caught that. There's no X's anywhere. It just lifts. And that's what causes this one not to be the dominant wave. So the only way you would know is if you identified that this one is pretty darn big. So you basically, we're waiting for a bigger buy wave to come in. Oh, maybe you could say if I can get over that VPOC, that I can get to this VPOC. What about this? This wave here. Yeah, so get over this VPOC. It'll go to this VPOC. It's a very small scalp. Okay. Okay, so then it does not mean it's the low. Right? It continues lower. Oops. And there was no divergence here, right? Not really. It was just a higher low. Okay, dominant, dominant, short. Okay, weak. That's probably going to get taken, right? So weak. So when it's got such a weak high up wave here, but this one is strong. See that? This one's dominant. But this one's not. And it's going to have a long time to be dominant. I wonder if the continuation short works on the smaller time frame. Yep. Okay, I'm going to stop this. I'm going to come back. I'm going to re-explain it in a new video now that I see the pattern. And we're going to go and pull up some other days and do some true back testing. So I'll be back in like 15 minutes, guys. I want to make sure I can find this later so I can do some more studies on it. But I need to have, I want to have my own video where it's just the back testing. So I'll be right back. Thanks for watching. Hope at least you got some good ideas. I know the trading wasn't very good today, but we gave it a try.